What's up, Joe? All right. So this is going to be very laid back, very chill. The objective here, I got about an hour till I got to bounce. The objective here is I want to see how my 2024 results would be different than current results using the data that we have now. Um, but it's not going to be super entertaining. It's just me doing math, which I love to do. On the headphones is Brain FM. Huge fan of that. But if I play it through here, you guys are gonna be like, what the frick is this? So huge fan of Brain FM. Definitely check that out. Um let's get started here. Of course, ask questions. Um but I love doing this. What's up, Alex? Joe says, I really appreciate this as backtesting, just as cloud were to me at the moment. Oh, okay. Yeah, so let's show you how it's done. So this is super manual. So I have this spreadsheet. In fact, let me share this with you guys. Hang on. I'm going to share this with you guys so you can be a viewer of the sheet. Anyone with the link is a viewer. Copy link. I'll drop this in the Discord. Okay, so at some point, I'm going to have a lot more into this. It's going to be what I'm going to send over to Mahesh, so it's going to be automated. But don't look at anything else. Like none of this is ready. However, these are my trades from last year. I don't know if you got to see these before. These are all my trades from last year, all in one place. There you go. That should be. Hang on, I got a bunch of extra data down here. 49 trades. And of course, I took out all the extra information you don't need. But trade one, entry date, ticker, entry price, the credit and debit that I got it for on the options, the close date. I don't have the close price because I didn't pay attention to that truly. I was only looking at the option return on capital. But what we're going to do is we're going to have 3.0 signals. Now, this is very much a work in progress, so you're going to see me make some changes as we go. So what I like to do when I'm backtesting is I like to start with what I did last year, right? Because I can point to this and I can say, okay, I know what I did here. I know why I did this. I know why I got out. And we can go through that as if it were today. So let's start with May 7th. That was MTG. So we go over here, type in MTG. And let's focus in the May 7th timeframe. Now you'll see my signal from 2.0 is gone, right? So May 7th is here and my signal's gone. So I can't really rely on that. So I've been looking at this one here, April 29th, but I would not have taken this trade. Why would I not have taken the trade on April 29th? First reason is it makes it easy to see if it's an uptrend or downtrend with the OVTLYR trend template with the green and white backgrounds. And you can see this one right here was not in an uptrend at the time. So if we go to April 29th on here on MTG, yeah, I mean, would it be close? Of course it'd be close, but your 10 is still under the 50, definitely under the 20. So that's one I would not have taken. It would have worked out, obviously, but I would not have taken it. So because of that, let me put entry date. No. 4/29. And then taken. No. So we'll start with that. I might change it up. But that's where we're going to start here. Would I have taken that trade on April 29th? Because they got repainted on here, I can't see the May 7th one anymore. I would not have taken that trade. So there's nothing else to do. Next trade, YPF. Yeah, dude, this will be available as a recording. The link that got you here, it'll be here forever. I'm not going to delete it. It might be unlisted, but I'm not going to delete it. Okay, YPF on May 7th. So it looks like it would have been repainted on April 30th. Okay. So let's do this. Actually, let me move this over here. April 30th instead of May 7th. Okay. We need to look at a couple other things. We need to look at market breadth. We need to look at sector breadth. Because these are all going to be different than when I put it on the first time. Market breadth, sector breadth, trend. This would have been, no. Let's move this over. Let's do market trend. So market trend, stock trend, market breadth, sector breadth. What else do I need to add? I'll add more as we go. But we're looking here, April 30th. YPF, April 30th. So this is the sector breadth down here. April 30th, it was bullish. We can see that right there. So that's a yes. Let's look at the market breadth on that date. April 30th of 24. Here. Yeah, so that was definitely bullish on that date. Bullish breadth on that date. Actually, let's put this. Market trend on that date. What was the SPY doing on that date? Oh, let's do this. SPY, and then we can do MTG over here. And let's go to April 30th of 24. All right, so I would not have taken this trade because the market was actually bearish at that time. We see that. So I would put no. I would put bearish. And then just for fun, let's look at this one on that date, April 30th. No, I wouldn't have taken that trade. That's okay. All right, let's go to the next one. Jeff. See, this is what this is all it is. It's where we're trying to confirm, is the market breadth work in our favor? Is the sector breadth work in our favor? Is the market trending in our favor? Is the stock trending in our favor? When we line these things up, then we can look at more minute details, but we're starting at the top and working our way down basically. And there's going to be plenty just like this that I don't have any trade that I put on, and that's okay. Chow tell you what's up. Norman, just joined. It's our walkthrough for 3.0. Or so 3.0 just went live literally yesterday. We're still fixing bugs. So it's not going to be for a couple weeks. But once all the bugs are ironed out, then yeah, absolutely. I'll be making all the videos. Should you go into post master key considerations, meaning you would not put on the trade if the trend is not, meaning you do not put on the trade. Yeah, basically. Yeah. That's what I'm essentially lining up is market breadth, sector breadth, market trend, stock trend, right? We're just making sure that the master key is lined up here. So stock, oh, I should actually buy signal, shouldn't I? Oh, by the way, my editing team is going to be texting me as we go through, so I'm going to have to work with them for a couple things. Okay, so I need to put spy signal. Okay, hold tight real quick. Okay. Might not be possible. How could you see your delta choices? Oh. Yeah, option pricing, I won't be able to. When it comes to the option pricing, I can't backtest that. But we can make the assumption of if the price of the stock is going up, we're probably making money on an 80 delta option. Most likely. Like it would be very unusual to not make money. So that's what we're going to be measuring is the outlier return on the stock price. All right, let's go to the next one here. Jeff. And then let's also open another screen just for the spy signal. So the process will get refined as we go, but it's super manual. Okay, so Jeff, I took the May 8th, which is now moved to May 2nd. Might be in a white overlay at that point. Let's go look at Jeff real quick. Here's my notes. All right, so May 2nd would be, well, that's 2024, or November. Hang on. Oh, yeah, that would work. Okay. So stock trend is good. Look at the spy signal on that date. May 6th. And this was on May 2nd, so no. So I don't have to do anything else. Right. So far I wouldn't have taken any of these because of one reason or another, right? That was bearish. We have some conflicting data here. Sell signal, right? We want to see these all line up to be bullish, basically. And if they are, then we can proceed. That's the whole point of this exercise. So when does the SPY actually get a buy signal? That'll help us a little bit too. Gets a buy signal on May 6th. So anything before that we wouldn't take. Okay. Well, let's go look at IFF. This would have come May 3rd. So a few days before the buy signal on the SPY. I mean, that would have been a really fantastic signal right there, but it's one I would have skipped. So May 3rd. It's like a JCI. I mean, it's basic. This is basically paper trading historical. That's all we're doing. May 9th. Was it good on May 9th? That IEF? That was JCI. Okay, on May 9th. And this was a buy. That's November. There we go. That was my trade. So let's move this back to May 9th. Yeah, legit. Okay. So far, so good. Stock trend. Bullish. Market trend on May 9th. Told y'all this would be boring. May 9th. That's bullish. Let's look at the breadth for the sector. May 9th is super easy. It's right down here. That's bullish. Yep. And then market breadth on May 9th. Bullish. All right. So far, this one's setting up. So. Joseph, it's not boring at all. It actually helps hear your thought process. Oh, cool. Glad to help. Okay. So JCI on the 9th. Right here. Heat map entry point would have been what? On the 9th, not the 10th. The heat map entry point was 49. So let's do this. Heat map entry. And then my heat map target was hit on the 17th originally. So that may be what the exit would be here. But let's see. I'm gonna have to zoom in. It'll be a little easier. That's weird that it shows not crossed over right there. Yet May 9th, it is crossed over. See, I would totally have taken that, but it might have missed my screener because it comes the next day. Let me ping my hash on that. Hang on. We'll type 10 more seconds here. Okay, I think that's just a math bug. We'll get that fixed though. Okay, but legit, I don't have a reason to not proceed with that so far. Heat map entry 49. So let's say my entry point is at, or my exit point here would be 63. So where would 63 get us out at? 49, 50, all the way up to 60. Okay, so it goes from 62 to 66. So a jump right there. That date is May 20th. Hang on. All right, so move from May 20th. Okay. Had a huge gap up. I don't know why. It doesn't show earnings right there. But yeah, that would have been even better. So we've got in earlier and got out later in this regard. Heatmap exit or exit point. So that would have been a 7.445. And then yeah, I don't see any other reason that I would have got out of that. Let's do 2.0 stock ROC. Oh, I need a date. The exit date would have been May 20th. 2.0 stock would have been 513 to 517. So 4.5% gain versus a 7.5% gain. How do you like that? 7.445. Okay, and that one was 4.512. All right, 3% gain. If we're to look at that in options terms. Oh, hang on. Mahesh just pinged me back. Close price, checked what we can see. Okay, cool. All right. Mahesh said different vendors have different close prices sometimes. That's so crazy. He's going to test the EMAs again, and he's going to focus on this stock. Okay, cool. You guys are so nice. It's super boring. What's up, Henry? Ciao, Talia. Different time frames? I don't know, man. Daily's daily. Daily candles are daily candles, so I'm not entirely sure. We'll get it figured out. Are signals generated on a daily bar? Or oh no. So all the signals come through at the end of the day. I believe it's like 10:30 p.m. West Coast time that OVTLYR updates. So you would be able to get in the following morning if you chose to. But it makes sense to add an optimal exit column point at the next cross below 10 EMA to track to the heat map. So what I'm trying to do right here, I mean, what you could totally do is, you know, copy my spreadsheet and then tweak it, and you might find even better. What I'm trying to do is see if my rules apply without having to change anything, and to see how much greater alpha that I can generate in that time. It's just ping me back. What'd he say? Yeah, he said, this is great. It's going to help us find bugs. Oh, show. All right, let's do this again. Okay, now let's do theoretical options pricing. So we got in at 440, got out at 695, 57% return on options. In fact, since we're going to use this one, let's go ahead and highlight it. If I'm not going to use it, I'll leave it blank. If I do use it, we'll highlight it. 440 to 695. So the way that we would do this is we would do opening price, closing price, and then prox option ROC. Hang on, you'll see the math in a moment here. So opening price was, I'm just going close to close. May 9th. Close price 65.85. And then this close price 70.59 equals this minus this times 80. Gets us to 379. That's not what I want. What do I want? No, that really won't work, will it? Okay, let's use this as our starting point. Let's say that I started with this. Equals this value. Okay, so this minus this. So new minus old divided by old, 6. I clearly did that wrong. That'd be 379 would be what our gain is. So 379. Oh, yeah. Okay. 379 divided by this, 86% gain. Now we're talking. Okay. This is the best I can come up with, right? I know what I spent for the option on that date, and we can calculate approximately what that difference would be here in deltas. So your closing price minus your opening price. So if we take this same delta spread divided by the opening price, approximate option ROC is that option. This minus this. Sick. Okay. Now let me move things around a little bit. So we'll do that. We'll put it on this side though. Okay, so the 2.0 got me 57. 3.0, approximate 3.0 will be 86. 2.0 stock ROC. 3.0 stock ROC. Where's that? Okay. Let's move this to this side. Stock ROC Opening price, closing price. Let's move these over. Okay. So if I did that correct, opening price, closing price, 2.0 stock gave me 4.5, 3.0 stock gave me 7.45, 2.0 option gave me 57%, 3.0 auction gave me 86%. So let me move one over here. Okay, cool. So then let's do this and this. There we go. That'll work. So now we can kind of pinpoint. Right. So taking the 3.0 signal on JCI in May, on May 9th, would have given us a 2.93% alpha, so greater than baseline. And on options, theoretical option alpha would have given us 28% more gain than that. How's that? Not bad, huh? I like that. I like that. Let me catch up on the chat here. Hey, Nate, where you been? Henry asks, if I'm not mistaken, OVTLYR is best used for day trading short-term swings since data is updated each day. I use it for swing trading. I can't day trade. I can't. It takes too many years off my life. So, yeah, I use it for swing trading. 3.0 returns based on options. No. These are based on the buying and selling of the stock itself. So if we're in JCI, you can look at performance summary. Signal returns give you 100%, yet only be in the market 55% of the time. And you can look at which ones. Oh, hang on. I got to ping Mahesh on this. I was going to say, I'm not sure which one is OVTLYR or which one is buy and hold. Hang on. Hey, we need to add the legend back to this chart for buy and hold versus OVTLYR. Okay. Yeah, Nate's got it. So this is what we're trying to ascertain is my strategy. How well is it going to work based on signals that were, or based on trades that I took last year? How well would the new signals work? That's what I'm trying to figure out right now. What's up, Federico? Welcome to the boring side of trading. Hard enough for the future. Yeah. Oh, dude. So being limited at about 2,500, that is a struggle. I think here's an idea. Henry, for me to you. Why not, over the next few months or so, get a paper trading account and then paper trade. And in the process, why not save up to 5,000, maybe 10,000? Give yourself 90 days, 6 months to figure out the process, figure out if it's going to work. And then when you start with a $5,000, $10,000 bankroll, you can actually do stuff, right? Because at 2,500, you're really limited. You might be able to get 2 or 3 positions on at a time. And if you're only doing 2 or 3 positions, each one of those is going to count. Like for me, if I can put 10 positions on, I'm not stressing. But if I only have capital for 2 or 3, then like if I have one loser, that's going to hurt probably 3 to 5 times as much as it would if I have a capital for 5 positions. Does that make sense? And losers hurt way more than winners. And that's so much more important to me, is focusing on how much can I lose versus how much can I win. Drops this OVTLYR's blue. Thank you for that. Mahesh pinged me. Oh yeah, he said he didn't realize I was missing. Isn't this fun? We're making this better as we go. All right, let's go back over here. Got about 20 more minutes that I can do this. I'll do it again later. but I have an appointment I need to make. Okay. So that one was great. Let's do the next one. In RG. In fact, let's take a brief intermission while Chris uses the restroom. We'll get back to it. Hang on.
Jeremy wakes up with stocks on his mind, checks his portfolio, it's bleeding, oh that's fine. Red candles don't scare him, he's been here before. Grabs his credit card, says time to buy some more. Buy the dip, buy the dip. Who needs cash when you can risk? Momentum's crashing, he don't mind. He'll back up the truck every single time. Analysts warn, this ain't looking great. Jeremy just laughs, says all dollar cost my fate. PE is tanking, the charts look insane. He shrugs, in 10 years they'll know my name. Buy the dip, buy the dip. This company's solid, I think, I wish. Price keeps falling, he don't blink. Says it's just a sale, let me buy some more quick. His wife says, honey, our savings are low. He says compound returns will soon start to flow. His friends say, dude, maybe just wait. He says, no.
And I'm back. Dude, that's exactly what I would do. Okay, let's get back over here. Let's work on NRG. So same process, right? We're figuring out if we would take the trade, and if not, that's okay. Don't worry about it. We just go to the next one. So NRG. So I took a trade May 14th. So ballpark May 6th, maybe? What would be the closest one May 14th? May 9th? That is the one that would be right before that. So yeah, May 9th. Okay. Now, okay, I'm going to teach y'all something real quick. May 9th. Spy signal on May 9th. Was a buy. But I don't think I would have taken it. I'll show you why in just a moment. I'm gonna show you how we get to that point. May 9th. All right, breadth is still increasing, still bullish here. Sector breadth. What sector is this? That's the energy sector. Utility sector. All right, May 9th of 24. This is a really solid lesson for those of you who are watching. Pay attention. And so I actually create this is my brainchild. I'm very proud of this, by the way. The market breadth on the utility sector had run up hard and fast. Now, of course, this has changed since I made the trades, right? We have new signals, so this would have changed. This is measuring how many buyer sell signals we have for that sector. We can see here that on April 25th, it was over 75%. For me, when I see breadth, if it crosses over 75, only enter if the breadth is still moving up. And then if it goes over 75 and changes direction, do not trade again until it reverses course and comes back up. So here we can see it hit 75 several days before the May 9th signal. And then it got up to 83%, and then it came back down. At that very day, I would not take any more utilities trades until way over here. So way over here. Now that's my rule. Does it mean it's the best rule ever? Probably not. But it keeps me out of the way. Now you'll see May 9th here, it actually had peaked at 92%. So let's think about this. 92% of the sector had buy signals. 92% of the stocks in that sector had somebody screaming, we got to buy it. If 92% of them are full of buyers, who's left? Right? When we reach a certain point, there's no more buyers because 92% of them already have their buyers. So what's left? Those buyers to turn back into sellers. And so we saw this sell-off really hard here on market breadth. So for sure, I would not have taken a May 9th signal on that. Does that mean it would have crashed back down? No. But that is a risk-off situation for me. So I wouldn't have taken that trade. So that's why I would skip that one. No. And then sector breadth would be bearish. Go to the next one, AEM. And let's zoom in over here. So this was on May 8th. We already saw earlier the SPY would have a buy signal on May 6th, so I know that's good. AEM. Market breadth on what date? The 8th. I know it's going to be bullish because it was a couple days before then. Okay, bullish there. And I'm still bullish until it crosses back, unless it goes over 75. Then I get crazy. Then I change things. So this is still bullish to me on May 8th. Okay, market breadth is bullish. Sector breadth on AEM. Do I have this up here twice? Hang on. I do. AEM, May 8th, sector breadth. So if we look at the bottom, this chart down here, this shows us that the material sector, if you're not sure what sector it is, you can just glance right there and I'll tell you. Material sector is bullish on breadth, so that's good. Market trend on May 8th. Bullish. Stock trend on May 8th. This is what stock? AEM. Oh, there's my notes. Oh, that's October of 24. All right, May 8th. Okay, we can see the stock trend's bullish. And that makes sense because it's deep in the green. So there, we're good there. Oh, I just noticed something. The fear and greed heat map actually was moving down. I need to add this in. Heat map. Heat map. Heat map setup. Stock trend was bullish. Heat map setup. That would be bearish because look, we can see over here the heat map value. Look at this number. Actually, it was coming down. Right, and on the buy signal day, it was actually lower than the day previous. So it wouldn't have even passed my scanner. So I wouldn't have even been looking at it. And it continued down for a while. And then it really fell off. So no, we wouldn't have taken this. And then let's just triple check this one here, JCI. I know it was good, but we're going to double check it anyway. All right, moving up from 48, 17, 48, 21, 49, 50, 33. Yeah, that would have been fine. That would have been fine. No issues there. Heat map setup was bullish. But this one was bearish. We wouldn't have taken it. Let's go to the next one. BAC. Bank of America. I think this is the one last year where the market gods blessed me because I didn't realize it had earnings. And oh man, did I get lucky. That was in July? Yeah, it was. We skipped right over June. July 11th. Oh no, I guess it wasn't. Okay, must have been another time. Usually in TrendSpider, actually, hang on. Might need to add that indicator on here. Huh, I don't know how to do it on this version. Oh, here it is. Oh yeah, earnings should be showing. Yeah, that's what it was. That was the earnings date. See that little orange line right there? Yeah, that I got really lucky on this one. But let's go through it real quick. BAC. This was July. Okay, BAC. July 2nd, where my trade was the 7th. I don't see an earlier one than that. So the 2nd, 7, 2. SPY signal on July 2nd was actually it was in sell. SPY was in a sell signal, so I wouldn't have even taken it. Okay, that's fine. It's part of the game. Let's go to NEM. July 11th. What's the closest on that? July 3rd. Okay. And July 3rd, SPY was probably in a sell. Yeah, it was in a sell basically all of June till June 11th. Hang on. Maybe I got my dates wrong. Oh, maybe I did get my dates wrong. That's July 3rd. My bad. I think I was looking at June. Okay, let's go back up to this one. Oh, no. The buy signal came on the 3rd, whereas Bank of America's came on the 2nd. Okay. Yeah, I was looking at the wrong date a minute ago, but that still holds. Yeah, it was the 2nd. Okay. But on the very next day, the SPY signal would go to yes, to a buy, and that's okay. Now, could you do that? Absolutely. You could totally do that. But it's not something I would have noticed because I would have run my scanner and my scanner would not have picked it up on that date. Right, let's go to here, July 3rd. Yeah, looks like it's crossed over here. So July 3rd is the same date as the buy signal on SPY, so that's okay. Yes. Market breadth on July 3rd of 2024. Was bullish right here. Okay. Sector breadth was bullish. We're looking down here. Market trend on July 3rd, 2024. was bullish. NEM. Yeah, that's my notes from that trade. Cool. So instead of the 11th, looking at the 3rd, market trend was bullish. Stock trend on that date. Bullish. So right here. Heat map setup. Oh, look at that. So the heat map actually was still going down on that date. So I know I wouldn't have taken it. From 49 to 48. But the very next day, the 5th, actually would have been a better entry because it had it rising. So I would not have taken it. Now, why do I say I would not have taken it? So if I go to my screener, I go to my bullish screener, it has to be moving up. So it would not have even come across my radar. I would not have even seen it to have taken it. Would it have been a great trade? Oh yeah, dude, look at that. Right? Rather than getting in here, I could have got in up here. So it could have been looking at, instead of what's that? 74 basis point move. Could have been looking at a 9% move. Wow, tremendously bigger. Way, way, way bigger. But I couldn't have taken it. I couldn't have taken it. It's not even worth the point of ifs. But you can see right here from 49, 49.20, 48.52, 48.66. Yeah, that the next day I would have, but that day I did not. So, no. All right, UL. This is going to have to be my last one. I'll do this again, probably later today. My plan is I have a doctor's appointment, and then I'm gonna go to the gym, and I'm gonna come back. Yeah, I'll do this. I'll do this before the next trading room later this afternoon. I'll put the link in the Discord, and these are obviously public, but I'll make them unlisted afterward. So we're looking at UL is close to July 12th. So this is July 10th. That's my wife's birthday. July 10th, 2024. SPY signal on July 10th of 2024 was still sitting on buy. Market breadth on July 10th, 2024. It's very bullish. Sector breadth, UL, you can just look right here. I mean, it looks like it's right at a crossroad. I probably would have considered it. I probably wouldn't have been okay with it. Sector breadth bullish. Market trend. That's bullish. Stock trend. That's bullish. Okay. Looking good so far. Let's go to heat map setup. All right, so it was going down. I think it was going down. That sucks. I wouldn't have taken that one either. 56.43 the day before, 56.36 the day of, the next day 57.08. Now, even though these trades, I'm like way slouched in my chair. even though these trades would have not fit in 3.0, there would have been something else to have taken its place. I'm just trying to find ones that I know that I would have taken so I can compare A to B and see how it's going. I'll slash down even more. All right, so Heatmap setup was bearish, so we wouldn't have taken it. But just because I don't have time to do another one at the moment, let's just compare for funsies. So instead of getting on the 12th, we would have got it on the 10th. So we would have got in quite a bit earlier. Look at this. So close at least almost 2% earlier. You know what? I might have taken a loss on this one. I did take a loss on this one. Oh, okay. This is actually tremendous. Check this out. This is really cool. So I would have I did take a loss on this last year because I got in here and immediately had to get out because it closed half ATR under, right? It closed down on this day. However, had I got in on the 3.0 signal, I wouldn't have even gotten out. I would have actually been able to ride it even farther. So we're going to use a hypothetical just since you're here and I'm excited. Buy signal here came at 56.36. You know what? Maybe. Now I'm considering, and this is how you come up with rules, because we just saw two of them that would have been great winners, but because they were coming down, I wouldn't have looked at them. But they weren't coming down all that much. I don't want to change that rule, because I mean, it's literally one day later that it goes back up. Okay. Let's go back to this. So where would I have gotten out if I had gotten in as an example? I would have given it a 10-point spread at 56.36. 10-point spread? Yeah, 56.36. So I would have got out at 66, which is here on July 17th. There. That's not bad at all. Taking a trade that was a loser, an actual loser for me. Granted, I wouldn't have taken this, but had I taken it instead of it being a loser, it would have been a winner. Okay. 3.0 is pretty sick. Okay, I got to run. We're going to do this another time later this afternoon. See you over there. What's going on, traders? Apologies for my tardiness. I did the stream, had a quick doctor's appointment, went to the gym, showered, and now here we are. Get to hang out again today. You guys get to spend more time with me than my wife does. Cheers. Pounding back a 4-scoop protein shake. So if you hear me like gulping on anything, that's what's going down. Okay, where we last left off was we were working on, did I close it? Oh yeah, this backtesting document here, which you have access to. If you need access to it, it's over in the Discord. We've gone through, or we're going through all of my trades from last year, looking for if I would have traded it this year on the 3.0 signals. Now, we've only had one so far. By the way, since this is a surprise stream, when I'm not in the regular setup here, welcome to the library. New thing that I acquired over the weekend were these Tyrannosaurus Rex head book stops. Very happy about that. Also, little thing that I have in my house is this is my like lower back lumbar pillow. I think it's hilarious. So yeah, I gotta set myself up here. Okay. And then, yes, I'm going to be very slouchy. Very slouchy. It's all about data, not about Gina. That is a deep cut. That is such a deep cut. That Gina is the female character in the Indiana Jones Xbox game that just came out a couple months ago, which is freaking awesome. That was a deep cut there, Chow Italia. All right. Back to this. That was a deep cut. I'm impressed by that. Okay. So we're at CLS. Now we're going to pull up. Oh, you meant China, like China in Trump-esque. Oh, daggum. Okay. Well, I thought it was an Indiana Jones reference because my little Indiana Jones Funko Pop is right beside it. Actually, you can't quite see that, can you? If I do this other direction. Yeah, my little Indiana Jones Funko Pop lives over there. That's why I thought she made that connection. All's good. All right, let's go back. Okay, we're on CLS. Oh, actually, let me catch up on the chat. Who's here? Who's here? Brandon's here. Dustin's here. Second back test today. Yeah, so this is literally my job. So I want to make sure that I make as much money as I possibly can. So I need to put in some work. Ashley wants to get nerdy. This is the right spot. The right spot. Yes, it is. Stocky Lucky. Well, this is a lucky surprise to get to hang with you again. Everyone started talking about GLD, and now it's dropping. Sold. Hey, wait a minute. Wait, just a cotton pick a minute here. I wonder how greedy it got. Oh, look, it got ultra greedy, and now it's getting snapped back. Who would have thought? Who would have thought? I feel a little back testy. You should see a doctor about that. All right. Is 3.0 backtest in VIP Investors Toolkit? No, I just shared it in the Discord. I just shared it in the Discord. Scrolly. By the way, these monkey donkeys are freaking hilarious. Scrollies. I just like came out wrong, and y'all are so funny. This one here. Yeah, anybody can access it, and you're gonna want to access it. So it's not just a trust me, bro. What's up, Sean? Jenny's here. Klepto's here. Brain Blast. Let's go. All right, back to work. CLS. Okay, so I took the trade on July 15th in CLS. So what we're going to do is we're going to zoom in on July 15th-ish, 2024. Okay, so let me move out of the way. So July 15th was this candle here. Now the new 3.0 buy signal is going to be July 2nd. We're going to come over here. We're going to write July 2nd. And so this is our, like, did we take it or did we not kind of thing. We don't know yet. The SPY signal on July 2nd. Here, so the SPY was in a sell signal at that point. So per the master key, this is what we're trying to ascertain first before we do anything. So because that's in a sell signal, we're come over here, or we're going to say SPY is a sell signal. And then, no, I wouldn't take it, so I don't even stress about it. And then we go to the next one, right? So it can be really quick like that. But what we're trying to figure out is, are these trades using my strategy that I have data for, right? And that's the key thing, is that, like, I could do theoreticals, but I'm trying to see ones that I could have and would have taken last year what they would have done, right? That's what we're trying to figure out. So let's look at KBH. So I took KBH on July 15th. So it looks like that would have backed up from July 15th to July 12th. Now, noticing right there, all the moving averages are right on top of each other. So let's go to KBH July 12th, 24. There's my notes from when I took it. So if it came through on the 12th, that gets me in, right, a day earlier. So was it like a Friday to Monday situation? Or Friday to Monday. Okay. So I'm saying yes, this is crossed over here. I need to send this to Mahesh. Hang on real quick. I'm also debugging. So I'm going to send this to Mahesh and say this candle right here, these moving averages right here, this stock right here. Text Mahesh. Hang on. Okay, and then I'm going to take another screenshot of it over here. Okay. So 7/12. So from Monday to Friday. We'll look at that in just a second. Stock trend is bullish. Since we already did that, we're going to mark it SPY signal on the 12th. It was still in a sell signal on the 12th until, oh, that's June. Oh shit, maybe I messed that one up earlier. Hang on. July 3rd. I did miss the previous one up earlier. That's okay. You know, I'm human. I do make mistakes. Okay. So actually, the one above it we need to do as well. So July 12th certainly is bullish. This is buy. Oh, wait. The second. No. I was right. Okay. Because this one is actually on the 12th, not the second. Okay. So the 12th, July 12th, 2024, is sitting in a buy signal. That's what we want to see. Market breadth on July 12th, 2024. Bullish. We see that. Okay. Sector breadth. I love this. You can come in here to KBH. Yeah, thank you. My bad. And let's go to down here. So here's the bullish or the buy signal. And we can see the market breadth was bullish at that time as well. I love the fact that it's right there for me to see. That makes it so much easier. The sector breadth. Come on, where's my R? There we go. Buy, bullish. Market trend. July 12th, 24. Still bullish. Okay. heat map setup. All right, so what we want to see is the heat map value, this value, going up. So it's at 5261. 5324 absolutely is going up. So that's good. That's good. I believe that is a setup there. All right. So my heat map entry on that date would be heat map entry of 53. Exit point. My exit point, if I got in at 53, would be a 10-point spread if nothing else happened. So let's move this out of the way. So I don't see any other reason that I would have closed it. Right? It's not going down. I'm at half ATR. It's trailing stop. No issues there. So if we got in at 53 on the heat map, 54, 56, 58, 61, 63 would have been on July 19th. This following day right here. So close to close. Now, I think I might have gotten out sooner in real life. Close below half ATR from roll. Okay, so most likely I would have rolled it. And then because of, yeah. Right. Getting in here, rolling it when this happens, I still would have closed at that point. So that'd be a 4.9 return. Exit point would be 63, but we're not doing that. We're doing half ATR. Exit date would have been July 18th. And see, this is nice that I have the data in front of me, so I can say, why did I close a half ATR from roll? So I can look at this objectively and say, okay, I don't know what was going on that day, but I know why I got out on that day. And so it's completely objective. Opening price, 76.27. Closing price. Remember, we're going close to close, 79.62. So new minus old divided by old, 4.3% return using 2.0. 3.0, I'm sorry, that would be a 3.0 stock return. 2.0 stock return, I got in at 76.65, getting out at basically the same point. So let's just do math. That'll be easier. Equals new minus old divided by old. 3.87. Okay. So my 3.0 alpha is 52 basis points. It's not so much. But let's see this. Approximately 35%. Maybe my formula is not good. $260. So the actual change between here to here, I'll tell you what, let's get real fancy. Let's get real fancy. Okay. So we can calculate the real option delta. This might blow your mind, but we're going to calculate the actual option delta of that trade to say, okay, if the stock moved this much, how much did the option price change that much? And then we'll apply that to the same difference, right? Because the formula I used previously would result in a lower return. And that just wouldn't be the case here because we dig it out a little bit higher on our actual stock return. So let's just do the math. Okay, so equals this minus this divided by same close price, this minus this. 104 deltas? Possible. Now, where did I get that? So we made $310. Well, $3.10. So it's $3.10 per contract between the opening and closing here. And it moved how much? Oh, hang on. This opening price, it needs to be different. 76, so that's D. That's why that didn't look right. No? Price? D? Yeah, 310. On how much of a move of the stock? The stock moved how much? Yeah, that's 105 deltas. We actually managed a 100. Yeah, Chris is live now. And this is what I'm telling you. We calculated the actual deltas. So my 80 delta that I bought, by the time I got out of the trade, was actually worth 105 deltas. Boom. Mic drop. All right, now if we apply the same logic of the 105 deltas, because that actually happened. Then we multiply that same from here to here times this minus this. 349. Then we do 349 divided by where we got in, credit debit. Yeah. 46%. There you go. So a 52 basis point change in the actual stock price, open to close, would have given me a 5% additional gain on my options. Now, I do see something I want to change here to make this easier for me as we go. So hang on just a moment here. Insert one column right. No. One column left. 2.0 entry price. Now, I'll be 100% transparent. I did not and don't take and put the exit price of the stock because I don't care. I care about the option price. So we have to make assumption that I got out at the close of that. Help if it was the same green, wouldn't it? Okay. So now let me put this value here, right here. I'm going to have to rewrite this formula here. Just a second. Exit date. Yeah, I want to get real fancy. I'm about to blow your mind. This is going to be fun. Hold on, watch this. Equals Google Finance. And then you do, hang on, I gotta look up the right way to do it. Finance stock prices formula. ticker attribute. Hang on, let's just ask ChatGPT. So I need a Google Finance formula. Google Finance formula where the ticker is in cell C12. C12. Date is in B12. B12. And I need the closing price for that date. Bam. How's that? That's pretty sick, right? Now, we can apply that same logic. Yeah, you would think one's the max, but that's actually where we got filled. We got filled and we had 105% of what the stock did. So if the stock moved $3, we got 310, basically, something like that. Right. So now I'm going to apply the same formula where needed. It's going to make life a lot easier. So we say, oh, let's just hang on real quick. Yeah, 2024, 7, 12, 24, 5, 9, 24. Oh, I had that in the wrong spot. My bad. It's actually 13, not 12. That's more better. See, that's where I got in, and that's entry price? Oh yeah, exit price. What was the exit date? Exit date is H13. H13. There we go. All right, now let's do that again. The date is in, this is C. Date for opening date. Hang on. Where's my open date? L. Go. So opening price should be, yeah, 76 ballpark. Okay. Closing price. We're going to do the same thing. We're going to change this to C again. And the closing date is V. Cool. All right, so now I'll make it a little bit easier on us. 2.0 stock return, 3.0 stock return, 3.0 alpha. Okay, so that was a little bit better. 2.0 option return on capital, 3.0 option return on capital. Let me rewrite this formula. Yeah, good call. Let's just do all the dates for years. Format. Where's number? Give me date. Hey, here's a pro tip. If you ever want to repeat something like I just did right here, just hit F4. Hey, like that. F4. All right, now I want to get very pedantic and replace all my 2025s, 24, because I'll just search within formulas. It just defaulted to 25 when I pasted the values in there earlier. Okay, cool. Okay, 2.0, let's do, I need to reroute this formula, hang on. So this is where we calculate the actual delta here, right? Hang on, let's just do this right. So G13, okay, G13 minus F13, that's the actual credit and debit that I paid. X13, closing price minus D13. Okay, this needs to be E. And then X13, X minus W, yeah, divided by F. Yes. Okay, now we should be able to copy this up to here. Damn it. Don't you love when you think you got it and then it doesn't work? I think maybe if I just copy this formula. H6. Told you to change all the 2025s to 2024s. Oh, look at that. It actually was even better. Very cool. All right. So 2 for 2, 3.0, outperforming 2.0. Now, I know this is a lot. Backtesting is a very manual process. But what we're trying to do here is I have the data from last year. So these are actual real money trades I made. I know where I got in and where I got out and why I got in and why I got out, which makes this a lot simpler. And just like that one, for example, I knew that I needed to close a day before I would have just glancing at the chart because I would have rolled it, right? I wouldn't have known that otherwise. Scottish guy says, I've started stock trades. I've recorded. Yeah. You got to get way deep, because you want to know everything about that trade. So you can do this, right? So I can do this with zero hesitation, zero confusion. I know exactly what I'm doing here. Yeah, it's going to yeah, you have to start recording all your trades. It's not going to be as much detail like Nate's saying right there. Options trading doesn't require all of this. This is just back testing, right? Well, Mike, you might get a question. Do you record all your trades on a spreadsheet like this? Oh yeah, for sure. Have to. Looking for a journal's great start. Yeah, okay. Let's get back to this. Let's do the next one. So AFL. So for example, something happened on July 18th. Like I closed 3 of them on that. Yeah, I closed 3 of them on that same date because there was a market sell-off going on. I don't know what happened. I don't really care what happened. But we need to see if I would have even taken the trade. So this was July 15th. Oh, this is actually great. When you have multiple entry dates that are the same, like for example, if the next one is the 12th, then I can apply the same market conditions forward. Makes it a lot easier. Okay. July 15th was the AFL trade I took. Let's zoom in. Oh, it's stuck. There it goes. So July 15th would have been backed up to July 11th. Now this one I probably would not have taken, because if you look at the fear and greed heat map, it went from 57, 56, 5618. So it went from 5641 to 5618. So I'm telling you, I wouldn't have taken that, because on my scanner, it wouldn't have popped up. Oh, my head's just texted me. Okay, he's going to be looking at those moving averages tonight. So this one I would skip specifically because it wasn't already rising when I got the buy signal. It was actually still falling. Now, this is the third one of these that we've seen where that happened. And when you start to see patterns like that, it's like, maybe I should look into this a little bit deeper. Maybe I should look into this a little bit deeper. So take in no, because the heat map setup was bearish. And I can keep track of when it happened because that's why I'm making the notes over here. Let's go to the next one. Z for Zillow. Oh, Mikey Mike, do you want to spread? You can have this spreadsheet. All you'll have to do is go up here to File, make a copy, and you got it. Now, there's a buttload of tabs over here for when I start automating my trades. I'm going to be doing the backtesting and the automations in the spreadsheet, and I'm going to send that over to Mahesh, but I don't have the data for that yet. So honestly, if you do make a copy of this, only make a copy of the very first tab, the one we're working on. Heatmap does lag a little bit. Maybe. See, this is what I'm saying. And Rick, you're exactly right. You don't know if something's going to work unless you're actually looking at it. Now, I'm really good at identifying patterns, not so much on charts, but on data. And that's how I've made my strategies is like, oh, when this happens, that happens. Oh, look at that. Oh, there's a real positive correlation here. Cool. I know I don't show it so much when we just watch other people's videos, but like I kind of know what I'm doing. I know my shit. So that is a thought I'm having. That is a thought I'm having. Let's go to the next one. Z for Zillow. Z for Zillow. Right around July 17th. Great question. I actually have just a personal limit of $1,000, not $1,000, but $10 per contract. $10 per contract, right? I purposely did not put how many contracts I put on here because we're looking at I'm not trying to show you how much is in my bank account. I'm not trying to do anything except give you the principles, right? And the principles always work on formulas. Always work on formulas. So if we look at, but yeah, a $10 contract is just a personal level I've always had because you can do so much more, right? You can do so much more if you get a $3 contract versus a $13 contract. Like you could trade 4 times as many shares, 4 times as many contracts. Okay, so we're looking at Zillow around July 18th. Okay, so this signal came in July 11th. And since we've been talking about that fear and greed, 53.53 running up to 52.68. Okay, so again, another one going down. The 9th, 53.53. The 10th, 53.04. The 11th, 52.68. Buy signal came on the 11th. Okay, again, similar situation. That's not to say that it's broken. It just doesn't fit. And so we'll have another opportunity to look at something else later, like Walmart. Around August 19th. Oh, here we go. See here, look. The 18th, 59.85. The 19th, 60.59. That's what Chris is looking for. Okay. So if we go, what date was that? Sorry. 16th. August 16th. So since we just looked a second ago, heat map setup is bullish. Stock trend is bullish. We can see that because it's in the green overlays already. Okay, the next step is looking at SPY on August 16th. Okay, SPY got a buy signal literally the day before. Cool. Market breadth on that date. Bullish. Sector breadth. Bullish. Right down here. Market trend. August 16th? Yes. Bullish. This is Walmart. All right, so this looks like a setup here. Heat map entry. 60.59. So I'm just going to put 60. I exited on, let's copy some formulas down. Heat map target being hit. Okay. Meaning I didn't have a reason to get out otherwise. So my heat map target, I went from, I don't have that data in front of me. Whatever my heat map target was, and I gave it a spread, probably a 10-point spread at that time. So if we're looking at 60 here, let's look at 70 and where that gets us out at. So it goes 60, 62, 65, 68, 71. So the exit date would have been August 22nd. Is that the best exit? Not necessarily in this case, but it does put profits on the board. So that was, again, that was the 22nd, August 22nd. And all these formulas should work. Let's see. Almost. What did I miss? Oh. That gun with the 2025s. I've told you this already. Yes. So here we go. All right. Slightly better on the stock return. Slightly better. Slightly better in the potential option return. Either way, money's on the board. I like it. Okay. Let me catch up on the chat. You guys are going nuts on chat. This is awesome, by the way. I'm going to go until 1:45, and then I'm going to go find us a video to talk about because this is way too boring for our normal content. I can't get any new eyeballs if this is what I do, right? So it's only for the hardcore outliers that are learning as we go. Deep thought. So if you see deep in the money long calls with an 80 delta and the contract price is over 10, you don't take the trade. Right. It is a thing. It's just a personal limit I have because, dude, if I see a $3 contract, I can trade 4 times as many as a $13 contract, right? You then move to a different delta. I could, I have, right? If it's like a 74 delta and everything else lines up the same, still liquidity, and it's at like $9 instead of probably $2.5, $5 deeper. Yeah, for sure. Absolutely. Right. This is facts. No, I got you. I got you. I understood. Michael's talking about PFE. Okay. No, the option price, like the price itself, I want it to be under $10. Probably not going to happen. This is boring. This is super boring. But this is my day job. This is my day job. I just get to have you guys hang out with me. Okay, see, this is what I'm talking about. You guys are the most excited about this, the most ready and eager to learn. Most people wouldn't care. Most people would like totally blow this off. All right, cool. Let's go to the next one. Halo. Also drinking the Trader Joe's flavored sparkling water. I love a Trader Joe's sparkling water. I grew up on Topo Chico, and this is way cheaper than Topo. I don't know where you live if you have Topo Chico, but it's like a Perrier in other parts of the world. But Topo Chico is way more Texan. Okay. Looking at Halo around August 19th. Okay, it looks like the buy signal came on August 13th. I want to double check this. So it went from 53.086, 53.18, 53.07 the day the signal came. And then, I mean, it absolutely worked, but I know my screener would not have picked it up. So this is another one that could be something. Could be something. But I don't have that yet, which is why I'm keeping these notes over here. No, I didn't take it because the heat map set up. I can look at this later and say, oh, you know what? If it's in the same percentage point or whatever, I would still be interested. And that may be a change in my rules. That's what I'm seeing right here. That absolutely could be a change to my rules. Write down when that came here. 13th. So the next one, XLF. XLF on August 20th. Okay, so this August 15th rather than August 20th. Yes, for sure, these moving averages are crossed up. And then here it did go up 52.36, 52.66. Okay. August 13th. Heat map set up. Oh, you know what? Everyone so far has had a bullish heat map. Has been a go. Let's do the rest of it. SPY signal on August 13th. Actually, it's still within a cell. This cell came July 19th and held until the 15th. Okay, so that is not one I would take. That's because the SPY was still sitting on sell signal. Ah! What happened? Let's go to the next one. FI. So here's the thing. I can do this for hours. I have done this for hours, and I'm going to do this for hours and hours. I love this. This is my jam. I love data. I love seeing it all click together. All right, August 20th, FI. But this is the part of trading that's not sexy, right? Building an edge. August 12th. Oh, but look at the wait. That's the sector heat map. I'm okay with that. Okay. This one actually is going up. It's small, but it's going up. That's good. So that was, again, August 12th, 24. 8. But this is going to be sitting on that sell signal from earlier, so no. That's handy to have the same date, so you can just easily reference like that. Let's go to scene. Did I type it in wrong? CIEN. Walmart was a yes. All right, August 15th. What was that SPY signal date? Was it the 16th? That was the same day. Okay. That'll save us a moment. August 15th. If I had a buy signal. Okay. Moving averages are crossed up. 60, 76, 60, 73. See, it's not higher. It's slightly lower. But I really think that that is something I want to investigate. XLB. Oh, thanks, Stocky Locky. Okay, XLB. August 16th. That's good on the buy signal for the SPY. I want to double check those moving averages. This is getting higher. August 16th. Hang on. My phone is lighting up like crazy. Okay, let's double check the moving averages on XLB on August 16th. It is very ultra slightly under. It may be like 2 cents under. I'm gonna count it just because I want to, because I want more data. Heatmap entry, or stock trend. Okay, market breadth on the 16th. Bullish. Sector breadth on the 16th. Sector breadth, bullish. It's got everything going for it. I think this is a go. Market trend. August 16th, yep. All right, let's go. Let's do it. Heat map entry. So it went from 46 to 47. Okay. Exit point for me would be exit at 63. So it went from 47, 47.58, 47.64, or 48.64, 49, 51, 53, 55, 58, 60, 62, 64. Look, the top candle. You can't tell me that's coincidence. No, sir. This is something these are patterns I noticed previously. Any red getting out at 63. It skipped right on up to 63, and that was the top candle. August 30th. What in the wide world of sports was that? That was weird. All right. So the stock would have been out 1.23% higher, give or take, with a 34 percentage point higher option value. Dude, this is so sick. Now, I did take one liberty right there because it's right on it. That 10, 20, 50 is like kissing cousins right there. Depending on when you got in, that could have been crossed up. Dude, I'm telling you, this is sick. Skinny buff guy's question with the monkey donkey. God, you guys are so funny. Oh my gosh. I just Spy's just like the main go-to. This is the main go-to. Chris Mix is sexy and super interesting. Very cool. Thanks, guys. Sexy's relative. I love this type of content that engages my brain and critical thinking far better than the brain rot content we see in mass. Yeah. Okay. So if we're going to be really, 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 really pedantic about this, depending on what time of day, right? Depending on what time of day, this is so close that it actually could have been crossed over. So that's why I say I'm going to give it. I took that one. We're moving it up a few days from the 21st up to the 16th. And what a difference that's made. By the way, 4 for 4 so far with outperformance by 3.0. Look at this, 40% on the option, 6%. Not a whole lot on this one. Probably wouldn't have even noticed, but 34% here. Yeah, we're 4 for 4. Let's do one more, and then I'm going to get ready for the live stream. August 26th on RF. That's Regions Finance. For very true. Very true. And the thing is that like the data has moved around a lot. So buy signals have shifted, market breadth has shifted, stuff like that's moved around. So it's not, I can't do an inline like I could have. You would think I'd be able to, and I really just can't, which is why we have to go through each step of this. August 20th. I think this one's also going to set up, by the way. Spy signal on August 20th of 24 was still in buy. Market breadth, August 20th of 24. Still bullish. Sector breadth. Bullish. Heat map, getting more bullish. Sector breadth, market trend, block trend. Let's double check our market trend. August 20th. Yep, still bullish. Here's my notes. This is going to be a really good one, by the way. Heat map setup is bullish. Yep. Let's do it. Let's do this one. This is going to be great. I'm telling you, this is going to be a good one. Okay, so heat map entry was at 67.43. Like it's 7 basis points higher. 67.43. So I'm going to type 67. Why did I get out of this trade on the day I did? Heat map stall on the 28th. Okay. Interesting. Interesting. I wonder if the heat map stalled on this 3.0 on the 28th. Like it's only 10 basis points different. But before we didn't have that level of scrutiny, so it actually would have continued on. Interesting. Okay. 67. So I would give it a 10-point spread. 77. And it hit 77 on what date? Oh, look at that. It didn't hit 77 until, well, other reasons to get out. Okay, cool. So this is where other trailing stops and such come in. 67. Yeah, okay. So really, where would I get out? Would I have held it to here? Oh wait, is that earnings? No, that's not earnings. That's just the next month. The 5th. You see right here, it closed under the 10, which is where I'd be getting out. Yeah. So we're going to just say 10 EMA. That was September 5th, 24. Let's copy our formulas down. I don't know if this is going to be better now because it didn't hold slightly, a smidgen. Oh, hang on. I actually lost money on that trade. Oh, look at that. 3.0 turned my loser into a winner. I lost money on that trade. However, on the stock, be up 3.53%. Wow, sick. So a 4 percentage point move. This probably is messed up because that's a negative. Yeah. So hang on. Yeah, turning a loser into a winner at this math is a little bit broken. Because if we got 3.5% gain from here to here, give or take. Oh yeah, here we go. Move that up. Yeah, 3.5% gain from here to here. That was 76 cents. So let's say if negative, about this, if AB 2 is less than greater than 1, do that. If it's less than 1, what do I need to do? This is going to be a little bit awkward. We'll do it the oldie way. Equals entry price. No. Closing price minus the entry price. Then we're going to do that times 80. Divided by our entry price. Did I do that right? No, I don't think I did that right. No, wrong. Divided by this. There we go. Yeah, buddy. Okay, check this out. Check this out. A 1% loss on the option, basically flat, would have turned into a 61% gain. That's pretty sick. That's really sick. That's the best one so far. That is by far the best one. That is awesome. All right, let me catch up on the chat and then I'm gonna bounce out. I need to take a Excel Google spreadsheet class for sure. Can I get some like this video, girls and guys? Helps push. Oh no, don't even like it. Or I'm gonna unlist it here in a minute. Like you said, it was so close to crossover. Yeah. You go, homie. Just claim it. One live stream to another. Yeah, I'll be here in just a moment. I want that free year so bad I could taste it. Lots of people that I've referred. Oh, cool. It's not about me winning. It's about getting more people into OVTLYR. Excellent. Thank you, sir. Let's see. Hope these are covered to watch later. I've been putting the link in the actually, I'll do you what? I'll do you one, Mark. Hang on. Gotcha, bro. we'll do just a second here. I need to get the links. There you go. There you go. Okay, if you guys don't mind, I would really appreciate it if you guys could go into the Discord. If y'all could go in the Discord and tell them what we've been doing over here in the backtesting. Couple things that I want to point out is every trade that Chris has found is on average 29% better on my options on average on the price of the stock, almost 2% higher on average. That's crazy. Oh my gosh. Yeah, this is so sick. This is so sick. But yeah, if you guys don't mind going in the Discord and telling everybody else, I mean, 86 of y'all are watching live, which is crazy because this is the most boring content in the whole world. But I want more people to understand this is the unsexy side of trading, building an edge. This is how you do it. How do you do it? You have a theory, you test your theory. And so far, we have a working theory that we might be looking to take trades if everything else sets up, and yet the heat map is within 1 point. If it's within 1 point, that may be a change I'm doing soon. So I'm very stoked about this. Where's the link to Discord? If you're in OVTLYR, just go over here to the Discord button right there, and then you're in. It's just that simple. It's that simple. It's huge. It is huge. It is huge. It's huge. The best backtesting. This is the best backtesting ever. It is tremendous. If Joe Biden had backtested like this, Joe Biden would probably still be in office, but Sleepy Joe couldn't keep awake long enough. He was on the phone with Hillary when he was sitting on the beach, and he's like, Hillary, I am so sleepy. I don't know what to do with myself. And then Trump comes along, and Trump is such a genius. He even has his name on the building in big old gold letters. I even heard that he likes gold toilets because I do. This is the best backtesting of all time. Yeah, exactly. I only traded long last year, dude. I only traded long trades last year. I had not a single short. Oh, I'm running out of time. All right, since y'all are here, we're going to do this together. Since y'all are here, I'm going to show you my exact process for finding videos. I have actually hacked the YouTube algorithm. This is so freaking cool. Hold on. I have a spreadsheet called YouTube Tracker that I will not give you links to. And then I go into YouTube. And then I switch accounts. Hang on, I don't want you to see all my accounts. To this one. So I have a dummy account that's only for YouTube, these videos. And then there's that one we were watching this morning. Bro, come on. Nobody wants to see that. Go to subscriptions. And then refresh. I do have Smurf accounts. Yeah. And then inspect the page. This is such a ninja hack. You don't need to know about this. You go to console and you paste in that code right there and execute. Copy console. And then this is the one from this morning. Take all the links because it just gives you the titles and links. And then I go on my YouTube Tracker spreadsheet and I go to the first tab and I paste values here. This is so cool. I shouldn't be showing you this. And it will, yeah, it just populated all that data. It just populated the title, the publish date, the channel, the views. Now, here's where it gets really, really, really clever and how I finally broke the YouTube algorithm after 22,000 views. There's a metric called views per hour, right? Obviously, views per hour. But I took that one step further because some big channels will obviously get lots of views per hour. But what is their velocity? How many views per hour do they get divided by the number of subscribers? And I call that velocity, right? And I don't understand why Jeremy gets so many views. I don't get it. His views stick out like sore thumbs. His velocity is always so crazy high, which is why we watch his videos, because for some reason YouTube is pushing it, and I don't know why. I just don't know why. And then I have this in top 10s here. Jeremy is look at this. This one this morning has a 2% velocity. Jeremy's is 3 times higher than that. I do not comprehend why his are so much higher. But because of that, it may be worth watching. So I click the link. And then I have this plugin. It's actually a Mr. Beast plugin called View Stats. And let me refresh. Should populate down here. I don't know why it's not populating. Hang on. Maybe it logged me out or something. Oh, it did log me out. Just a second. And if I refresh the page, that should work. Oh, this one's not being tracked yet. Okay. So then View Stats is really cool because it shows you like how well these videos are performing versus others of their own channel. Yeah, it's really cool. But I don't like Jeremy. We have beef. But here's the deal. YouTube's not pushing anything else. Literally not pushing anything else right now to the extent that it's pushing Jeremy. So this is going to be our video. This is going to be our video. As much as I don't want it to be Jeremy, the YouTube algorithm gods have spoken. YouTube is telling me I have to do a Jeremy video. So then, okay, you guys don't need to know all this. You don't care. So then I take this over to ChatGPT. And then I say, give me an image to represent this in 16 by 9 format. And this is how I get my thumbnails. And then I put them in here. I'm telling you, you guys don't need to know all this. And these are some notes I've made. Do y'all love this behind the scenes content? Type a 1 in the chat if this is interesting, and but do me a favor and type a 2 in the chat if this is stupid. You don't care, because I get it. I totally get it. Then I need to copy this and put this on my content schedule. And of course, I run all my analytics through here because I am a data nerd. And I look at how all the videos are performing, what topics pop off, what different things that I try. I can't believe you guys are into this. Brings me back to my marketing degree. Oh, hang on. I also, when there's a video I don't want to watch, I do look over here at the upcoming video ideas. Mikey Mike, was it this one? Where'd you say? Oh, you must have DM'd me. Okay. This video is a little abstract for trading videos, but it's business about Harley Davidson. One man ruined Harley Davidson last week. Oh, actually, that sounds really interesting to me. And then we can look at the hog stock price over here. Let's go to sell signal. Oh, I might do it. Mikey Mike. I might do it. Okay, y'all vote. Do a number 1 in the chat. No. We have to do something different versus 1 and 2. Do a number 5 in the chat if you want to see the Jeremy video. Tom Lee says shit's going down. Or do a number 7 in the chat if you want to watch Mikey Mike's this one man broke Harley Davidson. So 5 in the chat if you want to see Tom Lee says this bullcrap, or Harley Davidson is number 7. 7 wins. Good. I didn't want to do that one anyway. Okay. But I have to do some work. Just a second. I used to ride Harleys back in the day. I had a Harley Davidson Sportster, 2004 Harley Davidson Sportster. It was black. It was beautiful. I loved it so much. But my wife was pregnant with Colin. And she's like, "You will never be on that motorcycle ever again." She actually watched a motorcycle accident happen. Dude just like died all over the freeway in front of her, and she was scarred to death, which I don't blame her. But I do need a thumbnail. We are going to bounce over to the other stream in just a moment here. Okay. If you need good thumbnails, Grok has thumbnails? I gotta check that out. Doing backtesting. Yes. Hey, we're gonna bounce over the other one real quick. Hang on. While this is loading. We're behind the scenes at the moment because you guys are rock stars. Mikey, we're gonna use this video. Very excited about it. No more Jeremy. Go to anything else. Deb, you're so right about that. So I do get frustrated with ChatGPT because sometimes even when I tell it to be in 16 by 9 format, it still doesn't do 16 by 9 format. It's so freaking frustrating. But it looks like the thumbnail's going to come out real sharp though. No, Bjorn, you're not a nerd. You're a cool guy. I'm the nerd. He says I wouldn't be here if I wasn't interested. Dude, that is like ultra realistic. That's freaky. Did I never close one? Well, it could have been if that happened, market sell off in addition to. But yeah, you're right. I don't have anything written on there for that. And isn't it great that you can see why closing rather than just like, oh, I closed? A network error occurred. Sick. Okay. And then I take this and then put it over here. I do that. And then I have to stretch it now because stupid ChatGPT can't read 16 by 9 format. That'll work. And then I go picture format because this is what you have to do for YouTube. And you go ultra saturated. I have to turn the temperature down because it's always too warm. And I turn up the brightness. Not that much. I turn up the contrast. And then you want to compare side by side. Isn't that way? Oh, maybe that's too much brightness. It's way more clickable than this one. That's how you got to play the YouTube game, my friends. All right, I'm going to stick this over on StreamYard, and then I'll see you over there. Give me just a moment. Ready for more backtesting? Yeah, ready for more backtesting? Yes, sir. Dropping this in the Discord real quick. All right, let me update the Discord. That we're going again. Oh my gosh, with the monkey donkeys. You guys are so funny. Jeez Louise. Ewell School. I like that. Okay. All right, let's get back to it. OVTLYR University. That's Mark. Yep. No student loans needed. Okay. Let's get back to backtesting. If you're here, welcome. All right, so let's get back to here. Looking at NC. Manuel, what's going on, dude? Jack, how's it going? We're gonna do some backtesting. All right, NC around August 27th of 24. Okay, so this would be on August 21st of 24. Let's see. Actually, let's do this view. August 21st. I'm double checking the trend there because I'm not convinced that it's over good or it's over correctly. August 21st. Yeah, it really didn't cross over until the 23rd. So I'm gonna pass on this one. 8/21. 8/21, 24. No, take out 24. No, because the stock trend was bearish. Okay, then we'll go to the next one. Yes, I did change shirts on that one. I've been wearing the black show all day. I understand 3.0 fully ASAP. Me too, dude. That's why I'm doing this. That's why I'm on it like now. And I'm gonna do this for until around 3:45, and then I need to pick up my son from school, and then we will resume this again. You don't have to watch these, for sure not, but I do need to work on this, and so I figure I can do it live with you if you want. Okay, August 28th on Infi. All right, the buy signal came on August 20th. That's definitely crossed up there. And if we look at the heat map, 59.92, 59.34, 59.29 on the 20th. Yeah, so it's actually slightly lower here. So it wouldn't have passed my screener, so I wouldn't be in it. So that's a no. That came on the 20th. No, because the heat map was bearish. We'll go to the next one. DD. All right, more backtesting. Dude, like, I told you I can do this for hours and hours. I love this. Tough to adjust an American format of year, month, day. My brain goes soggy trying to work it out. I'm the same way, dude. The opposite direction. All right, DD around August 28th. Ooh, this came a lot earlier. Instead of the 28th, this came on the 19th. 42, 35. Yeah, that was going down right there. And it really wasn't crossed over until a couple days later. So I wouldn't have taken it. And that's okay. I say it was the 18th, or was it the 19th? The USB. Manual, I just like to know how to swiftly move the trend lines and just use the 10 and 20. Oh, you want to do the trend lines? Here you go. Go up here to indicators. Then go to candlestick, select indicator. In fact, let me take one off. So I'll take off my 20. So I'll add it in right now. EMA candlestick 20. Now I like it. Colored black like that. Boom, done. There you go. Feel the same way whenever I see from other countries. Yeah. Oh, or like when they use decimals instead of the commas for like 20,000, it'd be like 20.000. That drives me crazy. Mark, what in the wide world of sports are you doing here? Smartest man I know is here. Here's one stays. Isn't that much more logical? Darvian. I wouldn't have used it for decades. Yeah. You're welcome, dude. Mark, what's on your mind, man? US Bank around August 28th. Mark, did you see any of me of my other results yet? They're crazy. I'll show you in just a second here. Spy signal came August 28th, August 21st. 5630, 5622. Another heat map that wasn't quite there. So that was what date? 21st. Mark, one thing I'm noticing is there's quite a few buy signals that may have been tremendous, but the heat map is still ticking down, and it's not by much. I mean, it's like this one, 5630 to 5622. And so I know that wouldn't pass the screener because my screener is set for when the heat map is moving up. So I want it to show, but what I'm nervous about turning that off is that it's like then the floodgates are open, right? Because then I have to deal with everything. So I'm not 100% sure how I want to handle that yet. Because, like, for example, that one right there, US Bank, like I would never have even seen it. Tremendous trade that would have played out. I just absolutely would not have seen it. So I don't know. That is a theory that I'm working on. Okay, GLPI. Oh, before we get too deep into that one, check this out, Mark. So on the 1, 2, 3, 4, 5, on the 5 that I've done that pass through my signals, my stock return on average outperformed by 1.91% on 3.0 versus 2.0, just on the stock return. And then my theoretical option return outperformed by 29%. So everyone that passed through my criterias has been significantly better in 3.0. Yeah, I was like, had to watch at 1.25. I'm sorry, bro. I told you it'd be boring. Can't stay all day. Deep thought. Maybe get my hash to code hit hysteresis. I have no hysteresis. That's a new word for me. I don't know that word. Okay, let's go back to GLPI. Let's look around August 29th. Okay, there's August 22nd. Oh, where'd my indicators go? Oh, they disappeared. Let me add this back in. I need to add a 50. Okay. So we're looking at this buy signal on the 22nd. 6446, 6423, 6404, 6454. See, that's another one that it could have been perfect. Could have been a tremendous trade. It's just it's at like that turning point. I'm not saying it's wrong. It's just an observation. Mark has some thoughts that he's going to run through tomorrow. Cool. Yeah, we have usually on Wednesdays we do a pretty big outlier meeting to work on stuff. IBN on August 30th. Dude, what's going on with my moving averages? Now that 20's gone. Let's just remove them all. Oh, I removed the bottom one. I didn't mean to do that. Okay, hopefully this will stick. So we're looking at 23rd, August 23rd. Yeah, another one. That's fine. Just observation. CIEN. Around September 24th. There we go, September 18th. Here we go. Now we're talking. This one is, again, 65.50 to 65.97. The next day it was up and ready to roll. So the 18th becomes the 19th. That would have worked. That would have worked great. We're running up into that order block right there, though, but it would have worked. So no. 18th. Light. Looks like the new buy and sell signals are so good that they're actually considering the degree of deceleration of the heat map. I think that has to do with it, yeah. $9.24. Here we go. That's a winner. That's a winner. I think we're going to trade this one. September 19th. 59.42, 59.43. See, that still would have passed. That's what I want to see. Okay. We got bullish breadth, bullish trend. All right. So what was that date again? The 19th. Here we go. Breadth bullish. Black trend is bullish. This is bullish. And let's continue. 1924. Some 25s in there. Okay. SPY signal on September 19th of 24. Okay, so that's still in a buy. And then breadth at that point. It's bullish. Yeah, we would take this one. Buy. Market breadth is bullish. Trend is bullish. All right, heat map entry. So heat map on this point was at 59. Now, what was my exit point here? Close below half ATR from roll on the 30th. So more than likely, I would exit on the 30th again. 59. Let's see. So when did it hit 69 is what we're trying to figure out. On September 26th. Oh, look, my notes. So rather than getting in on the 24th, we're getting in on the 19th. Here. And then 30th. Oh, I must have rolled it, and then the half ATR close below was right there. But what about on the heat map? When did that hit 69? Date was that? The 26th. Shut up right now. Dude, I'm telling you, this spread is so real. The spread that I backtested ages ago is so real. That's a thumbnail. Look at this. 10-point spread from 59 to 69. I picked the top candle. How cool is that? Okay. So September 19th, September 26th. So let me put in this date here. September 26th. So I actually would have given out earlier than the other ones, 26, 24, where some of these would have been later. And this was 69. I copy my formula down. Bam. Oh, that's interesting. The stock. No way. That can't be right. $2.0 exit price. C30. C30. H30. Exit date. Huh. Because the 30th would have been here. Right around there. 3.4%. What is this 6% baloney? 6101 on the 24th? Oh, because I ought to get out up there. They get that date wrong? That should be the 26th, around 64, 62. Yeah? 6114 to 6404. I mean, we can see that. Why is the math not mathing? Oh, that's not the right formula. 2.0. Hang on, that formula is not right. Equals 2.0 exit price. New minus old divided by old. Okay, my 2.0 formula wasn't quite right. There we go. That looks better. Okay. All right, another winner. 10% higher on the option, 2% higher on the stock. That'll do. Oh, that's Albertone. Okay, geez, why didn't anybody tell me that? I wonder if price fluctuations would create more noise than signal doing so. A big part of 3.0 model updates leans on HM trajectory, but not in the distant relative sort of way. Dude, I'm really not seeing a lot of noise, like signal noise. When everything's lining up, it seems to be working just fine. As you can see, it seems to be working just fine. Let's go to FI. And like I'm just looking for more opportunities. That doesn't mean that it shouldn't be working the way that it is. I'm certainly not saying that it's not working right. All right, let's look at the next one here. 925 becomes 919. Well, this one's already really elevated here. So from 8746 to 8740. So I would have skipped 8751. Yeah. All right, 919. NRG. Mark, I saw this and I thought it was funny. So when Mahesh did the upgrade, somehow I now have a trial that ends on 118 days. But I do like having that button there so I can point to it. NRG on September 25th becomes energy on September 23rd. This is increasing. Okay. And 23. This is bullish. All right, the stock is definitely trending higher. We see that. But the breadth of that sector is actually going down. The breadth of that sector is going down. So would have been a great trade, but the sector breadth is going down, so we're going to skip it. Okay. Yeah, he's okay. He's okay. WPM on the 26th. No, not that one. We're at the 16th. 6770, 6761, side skip. No. 17th. 16th, 916. Next, TMS. $930. Oh, that can't be right. I went too far. Oh, snap. That's a good one. September 24th. This shit better work. 53.36. Oh, yeah, let's go. This is going to be a good one. September 24th. 4. All right, so this was stock trend bullish. Heatmap was bullish. SPY signal on September 24th. Yep, that's a buy signal. What about market breadth? September 24th. That's still bullish to me. If it doesn't cross over 75, even if it's coming down, that's still bullish to me. So that's all bullish. Market trend, market breadth, SPY signal, buy, but sector breadth, double, triple checky. So yeah, sector breadth is good. Yeah, it's at 55. It's not like 75 or anything, so that's good. Okay. Yeah, this is a go. Go, no go. This is go. Let's see. This is at heat map value of 53. So I would give it a 10-point spread. So I'm looking for 63. So it goes 53, 54, 55, 56, 58, 61, 63. So that's my exit on this candle. That is, what is that? The October 2nd. 10 to 24. Go a couple of my formulas. Ooh, that's a good one. What did I do wrong here? Oh, what did I do wrong there? I did something wrong. All right, 2.75% higher on the stock, 54% higher potential on the the option. That's not bad at all. That's not bad at all. Let's look at TMUS. I'll show you what that looks like. That's not bad at all. There's my notes. That's exactly my notes right there from when I did that. I haven't looked at it since then. Inside of a bullish order block right here. Interesting. I don't know if I'd have taken it, but I did. Oh, you know what? It might not have materialized by that point. So getting in on the 24th, that candle, getting out on October 2nd, this candle. Yeah, dude, that's a sweet move right there. There to there. I'll take it. I'll take it. Cool. Dude, Mark, we're batting 1,000 here. Every single one so far, overperformance. Average so far, 30%. Average on the stock, 2.0%. This is not bad at all. I'm so excited to trade this. Okay, let's do the next one. BX. Opening a trade too close after earnings. Like a gap and crap. I get that. I get that. I've not run into that before. But, I mean, that could absolutely happen. BX around October 21st. All right, this one came a couple days earlier, October 17th. 6082, 6094. Bullish on the breadth. This was, what date was that again? October 17th. Market sector breadth is bullish. Market trend. Let me look at this real quick. So the stock trend is definitely bullish. Good BX. October 17th. That's bullish. Oh, there's my notes. October 17th. Okay. I don't know what that was before. Let me remove all my annotations here real quick. Oh, wait a minute. That's earnings. But post earnings, I'm interested. Hey, here's your gap and go versus cap and crap. All right, let's see what we learned on this. That's perfect timing, deep thought. All right, so you see it goes from 60. Market trend, stock trend. I got to double check that SPY signal and breadth on this October 17th. That's bullish. That's bullish. And then SPY October 17th. That's in a buy. Okay. Heatmap setup. Yes, at 60. All right, so my exit point will be 70 or close below half ATR, and there was a market sell-off on the 23rd. Ooh. Okay, so most likely I'd have closed on the 23rd as well. Yeah. But what date did I get him before? The 21st. This is the 17th. 21st was here. Oh yeah, it should be a smaller loser. It's still going to be a loser, but a smaller loser. Exit point was half ATR. Exit date. So we're going to use the same date. In 23. All right, let's see what this shows. Got a 25 on there somewhere. Yep. Yeah. So 3.0, this is great. This is a smaller loser. It's still a losing trade, but it's a smaller loser than 2.0. About 60 basis points on the stock, potentially as much as 13% on the option. You know what? That's still a win in my book, right? Nothing's going to bat 1,000, but even this one, even though it was a loser, still outperformed the 2.0 signal. That's awesome. Okay. Mark says, outstanding. Really interested to see how applying GTTS, the golden ticket trading strategy, can reduce noise. Deep Thought had a great suggestion we can look into. Have a couple of quick fix approaches to talk about tomorrow. Got to run. Cool. Yeah, I got to run too. I'm going to come back in about 30 minutes or so, and I'm going to finish these out today. Then we might be a couple more days before we do any more backtesting. What's up, Outliers? Dustin's here. Salty Brad's here. Deep Thought's here. Y'all are awesome. Okay. So this is going to be the last one of the day. We're going to take it home. We don't have too many more left to do. So this is why I say we're going to take it home. I only got about 14 to go. What's up, Brian? Glad you made it. We only got about 14 more to backtest. But so far, so great. I don't know if y'all have seen the results yet, but the difference between the 2.0 returns versus the 3.0 returns, these are all on my trades from 2024, which this actually, hang on. Let me copy this and put this in the Discord real quick. All right, so these are all of my 2024 trades. And in this column here was the returns on the stock. This column here is returns on 3.0 versus 3.0, yeah. And then this column here, 3.0 alpha, is how much greater the returns are in 3.0 versus 2.0. Then over here is a theoretical option pricing based on the deltas that we had previously. So 2.0 return versus 3.0 return and that alpha there. So 3.0 returns average 28% higher, 28% higher on the options and averaging 1.82% higher on the stock. So this is tremendous. Now the ones that are still white are ones that are that didn't fit the 3.0 signal. So you can see like there's been quite a big difference in the there's been quite a big difference in the data, right? Because if the data hadn't changed, then all these would be there. Yeah, I saw aftermarket. Market's going crazy. Market's going crazy. Dude, this market's all over the place. Of course, Trump can make one tweet from his toilet and everything changes. So let's continue on here. So we're going to look at So. Salty Brad is working a top secret project. Ooh, how exciting. All right, looking at So first. Around October 21st. This one here, October 16th. Now, one thing that I was talking to Mark earlier, Mark was in the last live stream. I was talking to him about how a lot of these that I'm seeing, the heat map is still going down, so I would have skipped it. But a couple days later, the heat map starts going back up. He and Deep Thought had I don't even know what language they were speaking. Nerd language. Nerd! They were speaking nerd language, and I didn't understand what they were talking about. But it sounds like he's onto something. So this one here I would skip because the heat map is getting more fearful. You can see it goes from like 62, 61, 60, 59. That's where it would come through. And so I would skip that one. So I would mark this and say, what's that date? 10/16. And then it was Heat map setup was bearish. Then we just say no. Let's go to well. Sorry, my phone's blowing up. This is roughly October 22nd. Okay, so now we'd be looking at the October 18th. Here, 67.44, 67.43 is still technically lower, so I wouldn't take that. October 18th. On well. Let's do OHI. Dude, I'm good for it. I'm good for it. And of course, it was number 42. OHI is the 22nd. October 22nd. That one. All right, so here, 64.31, 64.04, on the 16th. Again, another one. But this is what we're talking about here. Is these could be fantastic signals, but they're still going down. But it's only slightly. Are they going down? Only slightly. Like it's consistent. It's at these turning points right here in the heat map, and it's just a smidgen early. And honestly, it could be by design, so I can't say that it's not. Let's do the next one here. HWM. Around November 8th. Okay, so this one would have been one day earlier on November 7th. This one will work. This one's probably a go. Okay, so the heat map's good. The market breadth is good. The trend is good. This was November 7th. Go ahead and copy some of these down. Sector breadth was good. Stock trend is good. This is good. I'm going to check the market trend on 11/7. Market trend's good. Oh, this is right after the election. This is right after the election. I remember these. I actually lost money on these. This is, yes, these are where I had my losing streak in November, right after the election. Okay, cool. Tell me 3.0. How would you have done this for me? Okay, so 11/7. What date was that? Hang on. When was the election? It was on the 5th. Okay, so the 7th I would be interested in. Market trend was bullish. Market breadth. That's bullish. The SPY signal showed a buy on that date. Okay. This is lit up green. Let's now see what we can find. I exited this trade, close below half ATR from a roll. Actually lost money on the trade, it looks like. Got in at 1,000. Got in at 970, got out at 970. So I lost money on this trade. Let's see. Microphone's bothering me. Okay. Heat map entry here. At 60. So I'd be looking for a 10-point spread if nothing else happened. Oh, this is not BX. What is HWM? There's my notes. We're looking at the 7th. So it looks like I would have got in a couple days earlier instead of here, getting in here. No, getting in here. Ooh, I even like that better. Getting in on that red candle at the bottom. Okay, so the 7th, exit point 70. Okay. 60. 70 happened on, what date is that? The 15th. I don't know if I would have made any money on that trade, but maybe a smidge. Maybe a smidge. I lost money on the first one. Just 11, 15, 24. So let's see what it would tell me here. All right, so the stock from the 2.0 entry went down by 3 basis points. In the 3.0 entry, it went up by 71 basis points. That's a 74 basis point improvement in the stock. I lost 3% on 2.0 options, which is basically flat. But I gained 6% on my approximate option calculation, because I'll never know for sure, which gives me an option alpha of 9%. I'll take it. I'll take it all day. That's another. I think this is the second one that turned a loser into a winner. Let's go. Dude, Kavan. Kavan, where in the wide world of sports have you been? I haven't seen you in, how long's it been? 2 years? Bro. Dude, it's so good to see you. OHI 2024. Oh, yeah, I appreciate that. It's stupid defaults to 25. Usually I appreciate it, but today it's annoying. Will these stocks not pop up on the screen or 1 to 2 days after? It absolutely would. For sure would. The issue with that is I wouldn't have noticed. Right, so for example, let's go to the screener. And if it's not a today signal, I'm really not even looking. And that, you've got such a great point. It can slot into there tomorrow, or it could come out tomorrow, right? So that could be something that that you use for your trading plan for sure. Great point. What's a meme stock? Money on carbon, lost money on. Oh, probably talking about Tesla. OVTLYR show ROIC and levered free cash flow. I can tell you for sure it doesn't show levered free cash flow. Return on invested capital. No, that's not something that OVTLYR shows. Okay, let's get back over this. So far, so good, though. 3.0 is outstanding. Let's go to UNM. Now, I'm not doing this as a sales pitch. You could take it as one, but I'm not doing it as a sales pitch. I'm doing it literally so I can see my own data. But I wanted you guys, because I had a lot of people asking how to do backtesting. And so I was just like, let's do it. Let's do it. Okay, UNM around November 8th. Here we go. Oh, this one's going to be good. This one looks like it's going to be really good. So November 6th. Oh, but look, again, 80.18 versus 79.73. So this is like 40 basis points less. The next day, 80.88. I wouldn't have taken that trade. It's the God's honest truth. I would not have taken the trade. It wouldn't have even passed on my scanner because it needs to be going up. So unfortunately, even though it's going to be a kick-ass trade right there, I have to say no. But what day was that? The 6th? Yeah. That really has been the crux of most of these I didn't take, is exactly the heat map and this column right here not being bullish. HPE. Around November 8th. So November 7th. And this one is increasing. We can see that from 36 up to 41. So November 7th, this is when it's going to be a go. I can tell it is. 11/7/4. I'm just going to go ahead and put yes. Spy signal crossed on 11/7. Oh, hang on. I already did one for 11/7. So I can take my markets and drop those in there. Sector breadth. Going up, looking good. And stock trend. Oh, we know that was good. We just saw that. Because it's going up. Yep. Okay, for sure. Where would we be? Heat map is bullish. So getting in at heat map value of 41. Exit point. If it's anything less than 50, I look to exit at 63. There was one earlier where I like ticked the top candle exiting at 63. Let's see if we can do it again. But we also need to keep in mind other things that might have got us out as well. So 41, 48, 56, 63 on November 12th. This was HPE. Here's my notes. So getting in on the 6th, 7th, getting out on the 12th. Not quite the top candle, only one off. So it's not much. It's 28 basis point or 28 cents, 1.3%. But still, following the plan, exit date was 11/12/24. Let's copy these formulas down. Oh, wait, did I lose on that trade before? I certainly did. So previously, I lost 1.9% on the stock. On this, I gained 1.35%. So that's a 3.25% alpha. Option lost 11% before. This potentially could have gained 8.79%, a gain of 19.89% compared to 2.0. Give me a freaking break. This is awesome. This is awesome. Now, not every one of these has been a winner. I think one of them has been a loser. How many is that? One out of 10 has been a loser. 1 out of 10. Dude, I'm telling you, this is so freaking sick. So freaking sick. Let's go to the next one. KMI. All right, deep thought. Kevon, I would love to do Dylan with money for sure. Thanks, man. Okay. So deep thought. Let's go do that. So let me add a filter. Let's do heat map. Bearish. So these would have been the ones that I skipped because of that heat map not being the right direction we need to see. We'll throw that as a light yellow. Yeah, I'm hoping Mark can come up with something cool. I mean, it's a lot of them. Look at it. It's a lot of them. Oh, hey, Paul. What's going on, dude? So these exits are at the end of the day for calculation. Could you have exited earlier on the day for some of these trades? Oh, yeah, for sure. So for me, I only trade at the end of the day, opening and closing. It fits my lifestyle. It's less stress for me because then I don't have to think, what am I going to do today? It's like I know what I'm going to do and I know when I'm going to do it, right? You're like a sniper, right? You're sitting there up in the blind and you're like waiting and you're waiting and you're waiting and you see exactly what you need to see and you know exactly what you need to do and you pull the trigger. That's how I look at it, right? You can do anything all day long. But for me, it makes it a lot easier to do it that way. And then I'm not second guessing myself either. Because it's like, oh, should I have traded at 11:30? No, maybe I should have traded at 8:30. No, wait a minute. No, 1:45 is the ideal time. If it's just at the end of the day, you get the most liquidity. And in my opinion, it's one less thing to stress about. But could you have made more money? Absolutely. Abso-freaking-lutely. KMI. All right, so we're looking around November 8th. Right here. Yeah, November 7th. This one's going up. That's what we want to see. Market or the sector breadth is good. This is going to be another winner too. 7th. I'm just going to go ahead and say, yes, we would have taken it. The SPY is the same. Sector breadth we just saw. Market trend is going to be the same. Stock trend. Already bullish. A heat map. You can see it was moving up from 79 to 82, which is really high. So if we got in, let me double check that. The 7th at 79, from 78 to 79. Because it is so high, I'm only going to give it a 5-point spread. Only a 5-point spread. So I'd be looking to get out at 84 on the heat map here, which happened when? 79, 82, 79, 82, 86. So that would have been November 11th. There's my notes. So getting in on the 7th, getting out on the 11th. This is going to be bonkers. Watch this. Getting on the 7th, getting out on the 11th. Almost the top candle. Almost the top candle. Tell me I don't know what I'm talking about. 3% on the stock, about 88 cents. Doesn't sound like a lot, but that certainly still fits the plan. That was a, wait a minute, it went from, that was 86, not 84. Exit date, 11/11/24. Copy my formula down. So 2 percentage points higher from 1.08 to 326, and then 16 percentage points higher from 14 to 30. I mean, actually, it's really 100% higher if you want to think about 14 and 33, but 16 percentage points higher. That'll work. This is awesome. Brian, on heat map exits, do you wait till the end of the day? I do. It's just what I do. However, bro, you're going to have the data at market open. And because you're going to have the data at market open, you really could exit anytime during the day, anytime at all. It's a great question. Doing these comparisons, you can't tell when you entered under 2.0. I can. I did all my notes here. These are taken straight from my journal. The date, the ticker, the 2.0 entry price. I got all the data. And this is why I have all the data. So I can go back and do this kind of stuff. So maybe some wiggle room in exit prices, since with 3.0 you're picking the end of day price. Sure. Oh, I see what you're saying. The exit price at the end of the day. I mean, right. There's going to be some sense here, some sense there. But that's also, great point. That's also why I do the end of the day, is because that's the number I'm trying to hit. If I can hit as close to the end of the day as possible, I'm good to go. And then I can have Google Finance pull formulas like this and make it easy peasy. So let's go to the next one, KRE. I see your point, and it makes sense. We are making small assumptions here. Hey, Ranjith, what's going on, bro? All right, looking at November the 8th here. Changed to November 7th. It's going up. Breadth is going up. Okay. This one's going to be another go. So it's also on the 7th. All my market stuff is the same. The sector breadth, we already saw, that's up. And then the stock trend, that's already going up. This is why I tell you guys, like the master key is so important. If you just wait, and I know it's hard right now, if you just wait for when the market and the sector and everything else is pushing higher, and then you buy stock, you're going to be like, holy moly, now I understand. I was talking to Nate one day, and I was like, dude, when you see me trade, it's going to be effortless. You're going to say, I've never seen anybody trade as effortless as this. And it just goes, it just flows. You're in flow state with the market. Right now, buying anything, you're betting against the bigger market as a whole. And that makes life so much harder. 75. So I would give it a 5-point spread. So 80 is where I get out. So some of these are really high already. Where's it at? Oh, that's right. This is the SPY. This is where I'm at here. Okay, so we're going to 80. So 75, 76, 78, 80. So that was on November 12th. So let's look at this one. This was, what stock is this? KRE. That's the regional banking sector ETF. Look, regional banking sector ETF. Okay, so the 7th instead of the 8th. And then let me just clean this all up. 7th was, and see, I like a red candle to get in. I like a red candle to get in. And then the 12th. Almost the top tick. Dadgum, almost the top tip. Let's freaking go. All right, so what does that do for us? It's funny to me when I say daggum because like that's actually how I talk. Yeah, that's what like Mater does in the Cars movie and stuff like that. Okay, so 2.0 would have been 2.92%, 3.0, 3.05. So slightly more. I'm not sure why this calculation is slightly less. Let's see. Option return was 23%. 65, 66, 99. Versus getting in at 64, 66, 6. Oh, this is actually slightly higher, 65.99 or 66.99. Actually would have got out slightly higher up there. I think that's why it's slightly lower. But even that should have made up for it. Hang on. There it is. Let me copy my formulas. I made a change on one of them earlier. I forgot to copy it down, it looks like. Yeah, I forgot to copy it down. Okay. Very cool. 90 basis points higher. Hang on real quick. I got to take a phone call. Sorry, bad call. He was asking if my kids had measles shots, because apparently there's a measles shot going on in our county, or a measles outbreak going on in our county. And I'm like, I don't know, whatever they had to have for school is what they got. Yeah, for sure. It totally could have run more. And here's the thing, Paul. Like, I know that I am giving up gains by having that small spread. I know I am, but I'm sacrificing that for win rate. So no stress. No stress. When you see me trade, it's going to be huge. You've never seen someone trade like this. If Joe Biden had traded like this, he would still be president because they'd be giving him all the awards for being the best trader of all time. Nate, I was just talking about you, dude. So Nate and I met for coffee one day, and I was telling him how when I do trade, it's so effortless. But y'all really haven't seen me do that this year because the market's been a pain in the backside. This one I would not have taken because it actually had a heat map exact stall, 72.83 for 2 days in a row. So let's apply this here. This was the 6th. Oh, we could just do that. Copy that whole thing right there. All right, we're almost done. JCI on the 11th. Oh, Ranjith, plan for OVTLYR meetup in Texas if you make at least 50% this year. Dude, I'm actually planning on a DFW meetup at some point. All right, this is the 7th. So I can apply all of my market stuff here. No. Sector breadth. Okay, sector breadth looks good. Stock trend looks good. Sector breadth is good. Stock trend is good. And then the heat map rising, right? Don't tell me it's not the 7th. 53.40, 54.15. Okay. That's good at 54. So we can run this one. So at 54, I would give it a spread of 10 points. Why did I get out previously? Close below a half ATR. So this was a losing trade for me. Let's see if we can turn this into a winner. Let's see if we can turn this into a winner. So going from 54, giving a 10-point spread to get out 64. 56, 59, 64. Freaking yeah, tell me I don't know what I'm talking about here. Look at this. Look at this. Nearly top ticked it. What date is that? The 12th. And this was 64. Okay. So let's run the numbers. I'll show you what we're looking at here. JCI. This was a losing trade that got turned into a winner. This is so cool. Okay. So getting in on the 7th, getting out on the 12th. Goodness gravy. This is why God put me on earth, is to do trading. I love this. Let's go. Let's go. Turned a loser into a winner. By how much? How tremendously did Joe Biden get spanked? Hillary would be jealous of this. Oh my gosh, look at this. A 1.5% decline on the stock with a 2.0 signal versus a 4% increase on the stock on the 3.0 signal. So a delta of basically 5.5% difference between 2.0 and 3.0. And then on the option, losing 18% versus making theoretical 46%. So a 64% gain. Dude, this is so freaking cool. All right, let's go to the next one. Let's go to the next one. This should keep you up at night to be excited about this. Timeline may be to add crypto. I don't know, bro. I'm just a dancing monkey in front of you guys. I have no idea what the roadmap on that is. But I know Mahesh really wants to do it. Like that is a big priority for us. I don't know when we're going to add those in. Okay, so this is going to the 7th. Again, heat maps rising 67 to 6741, 6702, 6741. Okay, so this is good on the 7th. And on the 7th day, God created outlier. All right, so the 7th, we already got all these. I'm just going to copy this all down. This is good here. And I already know the buy signal is good. Okay. So we'd be looking to get out. Oh, wrong button. 67 on the 7th. No. 6702. Okay. So 10-point spread here. So we're looking at 77 or any other reason to get out. So 77 hit where? Oh, actually, why did I get out before? Market sell-off on the 15th. So we're going to have to be on the 15th or sooner. 68, 69, 71, 2, 3, 4, 5, 6, 7. Okay, that was all the way until the 27th. All the way until the 27th. That would have been a huge move. Huge move. But I would have got out on the 15th, which is, I don't know. Let's go look at this. So the 7th to the 15th. Yes, sir. 7th, and then the 15th is here. Close to close. 95 basis points, or 95 cents, 3.79%. So we actually would have got out where? Oh, market sell-off. On the 15th. This is why I keep notes, because now I know I don't have to go worry about what I or would not I have not have gotten out, because for sure I know I would have. Oh, look at this. 2.0 had a return of 38 basis points on the stock. 3.0 is 10 times as high. 3.74%. Goodness. 2.0 option actually went down 5%. Now this option is not correct. Hang on. Yeah, this is fresh. This is one of those times where the stock went up a smidge, but yet the option price went down. That's your theta working against you, and the theta would not have worked against us here. So we're gonna do some estimating here. We're gonna say closing price minus opening price times 80. Okay. And then we divide that by what we paid for this one here, just as a reference point to get 46%. And I'm going to make this a slightly different shade of green, so I know that one's got a different formula. So yeah, not bad. 46 theoretical, 46% return on the option versus 5% loss. This is amazing. This is amazing. If you had to call for ATR, could you calculate your position size and therefore the gain? Oh my gosh, yeah, for sure. That's that's just math. For sure. AEE. AEE. Crypto would be fantastic. Dude. Crypto would be. That's a whole other market that people would just like lose their face over. Monday the 11th. I would have got in on the 12th. So let's start here. Or I did get in on the 12th versus potentially getting in on the 11th. Let me zoom in a smidge. So this one here, we can see the moving averages are crossed up. There we go. 77 up to 78. Okay, 77.28, 77.86. We're going to assume everything else is good. Well, I'll do all the checks in just a second. 77. Heatmap is bullish. SPY signal on the 11th. SPY signal on November 11th was still a buy. Market breadth on the 11th was still bullish. If it doesn't go over 75, it can come back to me until the crossover. So that's still bullish. Sector breadth, bullish. Stock trend, bullish. Market trend, bullish. What stock is this? AEE. Here's my notes. It's fun to go back and see the notes on there, isn't it? Oh, you know what? I think this was a losing trade, wasn't it? Yeah, I lost 42% of my options here. Oh, this is going to be juicy. This is going to be juicy. So on 77, I'd only give it 5 points up to 82. But here, it closed below my half ATR. Let's see if we can hit 82 first. 82 happened on... this looks like it's going to be a loser. On the 14th. Yeah, we're just going to call that close below the half ATR. So getting in on the 11... Yeah. Getting out... Close under the half ATR. 11th. Yeah. Yeah, pretty much. We'll just leave it there. Okay. Exit point, half ATR hit. And let's run our formulas here. Okay, still a losing trade. Still a losing trade. Slightly the same. Slightly more. Ever so slightly. I'm talking maybe pennies difference. So this, I can live with that. Okay, so 2 losing trades so far. That's not bad. Let's continue on. RRC. Well, I got a couple more. All right here. So this would have been on November 7th. Heat map from 36 up to 37. Okay, that's good. Say November 7th again, another November 7th. Yep. So I can copy all this. Let's double check that stock trend. Yeah, that stock trend's good. That's good. So getting in at 37. Looks like I'd want to get out at 63. If we can get that high and nothing else happens before then. So getting in at 60, getting out at 63 would be where? Way up here. Okay, it didn't actually hit 63. It didn't actually hit 63. So I actually did get out, close below half ATR. So this would have been a losing trade that we're about to turn into a winner. So the 7th on RRC. Okay, when would I have gotten out? I might actually have to do the math here. Opening, say we got in there. ATR value. .96. 48 cents under 32.77. No, I did that right. I did that wrong. 32.77. Yeah, hang on. One more time. 32.77 minus .48. There we go. 32.29. Okay, if it closes under that, we have to get out. Didn't. So we follow this unless something else happened. Market sell off on the 15th. So let's say we get out on the 15th. Because if I'm closing one, I'm closing them all. So what happened on the 15th? I'll take it. Small win, 59 cents, 1.8% on the stock. Small win, but I'll take it. So what'd that do for us? Another losing trade turned into a winner. Another losing trade turned into a winner thanks to 3.0. This would have saved my November last year. Look at this. A 2% decline on the stock on my first trade, 2.0. 2% increase on the stock in 3.0. So a 4 percentage point swing. A 19% loss versus a 19% gain. This is so crazy. Yeah, let's see what happened on the 15th. Let's see what happened on the 15th. That was that's a red light right there. You can see it from here. I know you can. Red light right there. Actually, close under the 20. Now my rule is to close under the 20. Close under 20. Get out of everything. Get out of absolutely everything. If the market closes under the 20, get out of everything. And it did right there. So yeah, absolutely I would have got out. I'm glad we checked that. Oh my goodness, dudes, this is so sick. And a bunch of them in a row that lit up. Last two, FT and T. All right, we're looking right around November 12th. So changing to November 8th. So 54.13 the day before, 54.30 the day of. Market breadth or sector breadth is good. This is when we would have traded. I can see it coming. The 8th, right? Yeah. I haven't done anything on the 8th before. Sector breadth is good. Stock trend is good. This is good. Market trend on the 8th. That's good. Market breadth on the 8th. That's good. Buy signal on the SPY. For sure. It came the day before. Yep, that one's good. We would have definitely taken it. This is at 54, so I would give it 10 points. Sorry, this just caught my eye, and I want to take a moment to talk about this, right? So as you can see, on any of these, I cannot put an expectation on the trade. I don't know where it's going to land. I have no idea at all. I can't set a profit target because I don't know where I'm going to get out. I have no idea where I'm going to get out. I know how much risk I'm willing to take. So if it goes the opposite direction, I know where I'm going to get out. But I don't have an expectation. I can't take a stock trade and say, oh, you know what? if it hits, or wait, what would Jeremy say? You gotta be flipping my flapjacks. I bought this stock at 98.56, and I'm such a genius. It has to go to 100. Shut up. Close below half ATR. This is gonna be another potentially loser into a winner. So 54. So I'll be looking for 64 here. 64 happened here on this date. It skipped up from 63 up to 67. So I'd say 67. Exit date November 14th. Let me copy my formulas down. What happened? Oh, that's 25. Hang on. There we go. So 2.0, I was down 4% on the stock. 3.0 up 2.63. 6 percentage point swing. I lost 32% on my option, but I could have potentially made theoretical 18.97, which is a 51 percentage points change. At 2024, I know, just default to 24 right now. That's what I need. Bros, do you see this? Another losing trade turned into a winner. And we're on the final one, and then we'll do all of our final stats. We're on the very final one. We'll do our final stats. Okay, MS. That's Morgan Stanley. Oh, I particularly remembered this one because I just went through a string of losers and I was like, oh, finally. Oh, finally. I needed that one. Okay, that was on November 13th. So we're going to back that up to November 7th. $77.02 up to $77.47. I'll take it. All this is going to be good. 77. So our exit point would only be 82. Only be 82 on the heat map. $77, $78, $79, $81, $83. Once again, Chris picks almost the top candle. Almost the top candle. November 13th. November 13th. Oh, hang on. Did I get in on the 13th? Look at that. I'm getting out. Oh, getting out on the day I actually got in before, if you can believe it. Getting out the day that I got in previously. And daggum, 24. Copy this down. And how much of a difference did that make? A huge difference. A 1% gain. Let me do this on the chart. It'll be a little bit easier to see. So getting in on the 7th, getting out on the 13th. So getting in here and doing this versus getting in on this candle and trying to make something out of it. Getting in here and getting out there versus getting in here and trying to make something. Oh my gosh, what a difference. I don't know if you can hear the excitement in my voice. A 1% gain on the stock in 2.0 versus a 3% gain in 3.0 with a alpha of 2.36%. A 9% option return in real life versus a 30% theoretical return. So a 21 percentage point gain. This is so freaking sick. So freaking sick. Now, here's where we get to do the fun part. Here, we're going to show our win rate, our expectancy, and all that stuff. right? So first, let's do win rate, average win. We're going to do it like this. 2.0 versus 3.0. We'll do it over here. Average loss. You need your win rate, your average win, your average loss to get your expectancy. Okay. So win rate goes. If 2.0 stock return here to here. Let me lock that row. It's greater than 0. Oh, I need to count if. Okay. Clearly I did that wrong. Okay, so there were 11 total 2.0 trades we're looking at here. Divided by count Y1 by 50. Oh, I messed that up. Y1 to Y50. Okay. So the win rate in 2.0, just on the trades that matched, okay? This is not everything, just on the trades that matched. Win rate was 61%. So now let's apply that over to 3.0. Yeah, let's do that. 88.89%. 88.89% win rate. Gotta stick my pinky up on that one. I'm real fancy. Average win equals average if criteria range 1 to 50. Average win 1 to 50. Criterion, okay. Greater than 0. Okay, so our average win is 2.1%. Versus our average win at 3.52%. Average loss, we should be able to copy this down and change this less than 0. Average loss was 2.28 versus 2.23. So slightly higher average loss. However, our win rate tremendously higher. So our expectancy equals average win times your win rate minus your average loss. But we're going to make this a positive value times your loss rate. Expectancy is 0.50%. So on 2.0, my expectancy on the ones that matched was 0.50%, meaning every time I put on a trade, I could expect to win 50 basis points on the stock. Not too shabby. It's a positive value. That's what you want to see. Oh my gosh. It's nearly 6 times higher. Okay. Mark's going to flip out when he sees this. Now let's do it for options. Should be able to just copy this over here. Win rate for options, slightly, or it's less than this. Why is it less? Hang on. Oh, because there was like this one right here. I made money on the stock, but I lost money on the option. Okay, that's why. Average win 28%, average loss 18%, expectancy 474, 88.89%. And yes, enter the maniacal laugh. You sound like the Two-Face, not Batman. So, dude, come on, Launchpad. We're on the same team, bro. 88% win rate, 44% average win, 32% average loss, 36% expectancy. Let me frame the context of this. If you had a strategy, granted, the sample size isn't huge here, but we're just getting started. If you had a strategy where you had an 89% win rate and the expectancy, meaning that if you put on a trade, you should basically expect to win 36% each time you put on a trade. Now, not every time, but the expectancy means that on any given trade, you should, not should, but the outcome will roughly be 36% gains every time. Won't happen every time, of course. This is bonkers. This is freaking crazy. I got to show this to Mark. Hang on. I'm going to text him this right now. He's probably going to be like, this is not possible. Hold tight. At Mark. Just finished backtesting all my trades for 24 using 3.0 signals. The results are unbelievable. Paste screenshot. There were, what is the frequency? What's my N value? 18. We're only 18 in the sample set, but these returns are just crazy. Several losers turned into winners. Yeah. Okay, cool. So that was fun. That's $1 in the cuss jar. Shut up, Dustin. Notice how hesitant he was to say should. Yeah, because should is the most dangerous word in finance. Okay, so Paul wants to do some theory here. I want to do some theory. I don't know if I can pull in ATR, but we got a moment. Let's filter just on greens. So let's say you started with 100K. So you started here. Let's say, let's just do 1 lots. That's just going to be the easiest that we could do. Now, let's say that you got, at your beginning balance, this is your ending balance. So you take this plus 1 plus, no, that times 1 plus, and then the percent return on the option. So that's all I'm trading. This. No, that'd be the full port. Let's not go full port. Let's do like 10%. So H6 times 0.1 times that. Oh, it's a date, 1938. Awesome, thanks. $14,000. And then we compound this. It's this plus this. And then another date. Oh my gosh. Yeah. Then we apply that here. We apply this down here. This here. Why did that not work? Oh, because this is not 1 for 1. 13. Then this. Yep. Actually, this I can just paste like this. Okay, so what's your bingo card? Put it in the chat. Average loss is a bit high. Sure. But it's also 11% at the time. I'm focusing on that. I'm focusing on the 88%. Okay. What's your bingo card? What's your bingo card? What is your estimate for what this $100,000 turns into in these how many trades? 16? I thought it was 18. Oh, I must have counted something else. 16 trades, right? I think it was 16. I thought it was 18. All right. Darwin says 375. Nate, it's gonna be way more than 130. Other Nate, 325, around 270. All right, let's see how this goes. This needs to go up to 16. Now remember, what we're doing is we're taking 10% of the value of what we have here, and we're adding in a theoretical gain from your option. Okay, that's what we're doing. We're not going full port. This would be 21. 21. This would be 22. This would be 30. We're about to pass a $250,000, by the way. This is 34. This is 35. There's your $250,000. This is 39. You're at 300 now. This is 41. If this hasn't broken your brain, I don't know what else to tell you. I was talking to my friend. We were sitting at the pool at his house the other day, and I was telling him how I didn't even realize that I would have won the investing championship last year in the options category. And he was like, "What was your return?" I was like, "It was 91.37%." And he's like, "You doubled your money last year?" And I was like, "Yeah." And he goes, "No way." And I'm like, "Bro, in my industry and what we do, like that's not uncommon. That's not a thing where people say that's impossible." We're about we're over 500. 645. Shut the frickin' front door right there. Equals this minus this divided by this. That's a 546% return. And how many trades? 16 trades. Does it feel like I know what I'm talking about yet? Yeah. Shut the front door. That's a 545% gain. There was one losing trade in 3.0. I think there were two. And I'm using the options over here. Yeah, there it is. Just the one. Oh, wait a minute. Maybe I used the wrong column. Maybe it should have been. Oh, it should have been AE, not AF. Hang on. I think this is actually going to get better. No, yeah, that was AF. Hang on. I need to change this to AE. AF, AE. Them formulas. Oh, it's only 593%. My bad. Shut the front door. I know, right? I know. But like there's gaps in between these. I know. Check your math. So we're multiplying 100,000 here times 10. So just 10% of it times AE6. Am I doing this right? Yeah. 99% on that option. Yeah. So 10,000 plus 99% would basically get you to 20,000. Then we add that and we do it again, right? And so this one here, so basically $12,000 times 47%. 5,600 plus the 12,000. 17,640. Yeah, math is good. Oh, wait a minute. Maybe I didn't do that right. Hang on. Maybe I did mess this up. Just a second here. This times this, right? Yeah, row 41. Yeah, something's off. Hang on. It's still going to be crazy good. Where's my math? It's gone wrong. Oh, hang on. So that would be your profit. Yeah. That's it. Okay. I got ahead of myself. There's that loss, and that should be a loss. Yes. Okay. There we are. I had my math off. I'm still going to laugh evilly. There we go. 74% returns. There we go. Okay. That feels a lot more realistic. Wait a minute. Are y'all going to complain if I only return 74%? Mark's here. Really should group principal by entry date too. Group principal by entry date. I'll take it. Yeah, I'll take it too. Dude, Mark, thanks for showing up, bro. Oh, I love Dr. Mike. Dr. Mike Israel. He's great. Yeah, Mark must have seen my text and jumped over. But yeah, so to this point, Mark, using 2.0 stock returns, win rate was 61%, average win 2.14, average loss 2.08, expectancy 50 basis points. 3.0 average win, or the win rate was 88%, average win 3.52, average loss 2.23, so expectancy 2.88. And then on options, it gets even way more better. Now, you will notice that this discrepancy here, and that's because I had one option that the value of the stock went up, but the option price went down, and so that's reflected there. But the 91% was better. Oh, no. So I had 40 something trades last year. This is only a sample set of how many? 16. That's just a sample set of 16. So he's on a 2-minute lag. So this is really cool. You've already got the link to the spreadsheet, but we highlighted all the ones that I didn't take because of the heat map stall that we talked about earlier, where it was, like 51.02 versus like 51.00. So I wouldn't have taken it. So all those are highlighted yellow. Everything in green is ones that did match, and it actually got a lot more in sync near the end than anywhere else. But yeah, these results are absolutely crazy. Still phenomenal with the small sample. It will be interesting to see how many more opportunities there will be in 3.0 versus 2.0 for the entire year. Yeah, for sure. And I keep telling you guys, right? Just sit in cash and wait. Sit in cash and don't F up, right? Sit in cash for the opportunities to come to you. You've got the data. You and me, we both have the same data. And now all you have to do is execute like me. In fact, you can follow along with every trade I do. That's up to you. This is crazy. Serious craziness. All right, anybody in the Discord trying to reach me? No. Okay, cool. Listen, this was fun. You've got the link to the spreadsheet. Go check my math and see if I did anything wrong and let me know. I'd love to get that feedback. My next round of backtesting is going to be on individual stocks, and that one's really, really tedious. Because you have to go through each one, look at each buy signal until Mahesh gets me the data, which hopefully that'll be soon. You have to go through each one, compare each buy and sell signal to the SPY, etc. So I'm really hoping he can just data dump that over to me. That'll be so much easier. But yeah, this is tremendous. I don't know if you are as excited as I am, but I'm not gonna be able to sleep. I'm not gonna be able to sleep just thinking about all the Lambos and all the Rolexes and all the stuff that I can buy. I'm very excited. So thank y'all for joining me. I know this has been probably 4 hours of backtesting today. Super boring content, but seriously cool. Seriously cool to be able to do this, right? Philip says, this was amazing to watch, Chris. Looking forward to the remainder of the year. And now you can buy AMD. All right, you guys have a great night, and I'll see you in the morning.